Hello, and welcome to the June 24th, 2026 meeting of the Governmental Accounting Standards Board. Great to have everybody back today. We've had quite a week with GASB meeting, public forum on infrastructure, board meeting yesterday discussing and moving forward revenue and expenses, and approving the start of pre-agenda research on the financial reporting entity. Big week, another full day. Looking forward to it. We'll get right into it. Implementation guide update, I guess we call it, on subsidies, at least an implementation guide related to subsidies. Lisa, I'll turn it over to you to walk us through our feedback from the exposure draft.
Thank you very much, Joel, and good morning, everybody. I can't think of a better way to start the morning than to talk about the proposed implementation guide on the financial reporting model improvements specifically related to subsidies. As you all know, you cleared that for issuance on February 10th of 2026. We put it out for public comment, and we received 94 comment letters, which included in that were 17 what we call form letters that were exactly identical. So what you have before you here this morning is a paper that gives you the substantive feedback that we received on those proposed questions and answers that were included in that exposure draft, along with the project staff analysis and our recommendations moving forward based on that feedback. I think what's important to note is that there were a couple of things that were not addressed in the paper, and I want to explain why and when we're going to address them. So the proposed effective date and the transition provisions for the final implementation guide and the requests that we got to delay the effective date of Statement 103 because of the way these subsidies Q&As link with the provisions in Statement 103. We really feel that it's going to be better for us to address those at your next meeting in conjunction with the pre-ballot draft, and that's because a lot of how we're going to analyze that is going to stem from the modifications that we potentially make today to those Q&As. Also, as you all saw, because I know you read all the letters, we had lots of requests in the letters or recommendations to address certain topics that were not included in the exposure draft. And so what we're thinking there is that we will keep track of those. We will monitor those for potential consideration in a future implementation guide. So with that, let's jump right into it. Roberta and I are going to tag team this just like we did at the GASB meeting on Monday. So I'm going to start by talking about question 4.1. As we all know, that question related to supplemental payments to hospitals that were in addition to the standard contractual Medicaid base payment that was made on a fee-for-service or managed care basis. That was the whole focus of the question. And of course, in that proposal, the supplemental payments, as we stated in the question, were not part of the contractual relationship between the patient and the government for the healthcare coverage that they were receiving. So yes, the patient had no contractual relationship for the healthcare coverage associated with that supplemental payment. So in that circumstance, the proposal was that the supplemental payments would meet the definition of subsidies. As you all saw, we did receive some agreement to the proposed question and answer, but we received some disagreement to what we were proposing as well. And so I've kind of like to take the bigger chunks of the reasoning for that and give you how the staff analyzed it and came up with the recommendation that we did. What's that, Joe?
Is analyzed a word?
I don't know. Did I just create a new word?
I think you did it. I like it, though.
As it came out of my mouth, I thought, yeah, that's probably not a word, but I'll go with it.
I'm sorry to interrupt.
No, that was fine.
Try to have.
So the first big thing that we heard was that the facts and circumstances that we presented in the question mischaracterized how healthcare payments, particularly these Medicaid supplemental payments, function in practice. And on top of that, they felt that the proposal actually created some inconsistency with our existing revenue recognition model. So in that case, those respondents really believed that existing GASB literature of our exchange and our non-exchange transactions should be applied to the definition of subsidies, and that the entirety of that relationship between the payments from the government to the hospital should be considered together. So what we mean here as one transaction, right? And of course, the way we were looking at it in the proposal was that it was actually two transactions, the regular payment versus that supplemental payment. So in their case, considering them together would result in these revenues being reported as operating revenues. That's what they felt didn't meet the definition of subsidies and should be considered operating revenues. So as we know, in Statement 103, the definition of subsidies intentionally did not use the terms exchange or non-exchange. So we felt that comparing to the guidance for exchange and non-exchange transactions, which is used for the purpose of recognition, would not be consistent with Statement 103, because Statement 103 was really used for the purposes of presentation. So two very different things, recognition versus presentation. Now, we did acknowledge and agree with the issue raised about whether that base payment and the supplemental payment actually constituted a single transaction or multiple transactions. And really, Statement 103 did not, and it was not intended to answer or change practice regarding that issue. So as we all know, you are very actively deliberating issues related to revenue and expense recognition right now through our revenue and expense recognition project, where the exchange of value in what's tentatively been decided by the board thus far is really not a consideration in how revenues and expenses would be categorized for purposes of recognition. So we really agreed that maybe this issue may be more appropriately addressed within that project. Another big thing that we heard related to this proposed Q&A was that how governments would actually be required to present these payments would no longer be comparable to the not-for-profit or non-profit hospitals that actually follow FASB guidance. So in this regard, we really believe, we being the project staff, that governmental hospitals presenting these types of payments differently from nonprofit hospitals who follow FASB, you actually considered that and rejected that as a basis for classifying resources when we were going through the deliberations that led to the issuance of the subsidies guidance in Statement 103. And Statement 103 has already been issued inclusive of a definition of subsidies. So the implementation guide being proposed is really intended to reflect the application of that guidance that's already been issued by the board. But all we're doing is presenting specific facts and circumstances and trying to give guidance on how that would be applied. The other thing we heard is that the proposal may create some inconsistencies within financial statements, because Statement 103 provides that transactions that are otherwise classified as non-operating should in fact be classified as operating if they relate to the entity's principal ongoing operations. So it's kind of important to note here that that guidance in Statement 103 was actually carried forward from Statement 34. It was already embedded in GASB's authoritative guidance. And during the deliberations that actually led to Statement 103, the board continued to believe, as it did when it issued Statement 34, that the definitions of operating revenues and expenses and of non-operating revenues and expenses generally should continue to be consistent with the guidance for determining operating, non-capital financing, capital and related financing, and investing type activities in Statement 9, which of course is our cash flow guidance. So by focusing narrowly on Medicaid, this was another thing we heard, was that by focusing narrowly on Medicaid, it ignores the wide range of supplemental and variable payments that are used across Medicare and private payers, which as you saw in the paper, we can see that there is a lot of variability in practice in regards to how these payments work. So all of that to say, the project staff really found two arguments pretty darn compelling. The first one was that you are, in fact, actively deliberating a project related to revenue and expense recognition, which, in fact, may clarify some of these issues that were brought up by respondents. And then the second one was that whole variability idea, that the variability in these supplemental payments that exist really could create some inconsistency in the application of this question and answer. So specifically, as a result of that, we believe that this issue may be more appropriately considered after the completion of the current revenue and expense recognition project. So we are proposing that the question and answer not be carried forward to a final implementation guide. So with that, let me open up question number 1, which is, does the board have any observations or feedback on the proposal to not carry forward proposed question 4.1 to a final implementation guide?
Thank you, Lisa. Board responses to question 1. Thoughts? Jackie?
I agree with the pulling of 4.1, and I think the arguments that were made to align it with RER in particular were pretty compelling based on what we were looking at. I do think there are going to be a lot of technical inquiries related to this because it's seemingly, to me, when I was reading it, there are a lot of people that don't seem to understand the concept of subsidies. And I think that some of the things that they were actually talking about should be classified as subsidies. So I think that we can eliminate the question, but I think you're going to end up with a lot of technical inquiries.
Thanks, Jackie. Diane?
I agree with staff's assessment. In reading all of the comment letters, I learned more from the hospital side than I ever knew. I understood it from the state side because we have audited this program, but from the hospital side. So I agree. I think they had some really compelling arguments, and I agree that we can probably address a lot of this in RER.
Thanks, Diane. Robert?
I agree with the staff recommendation to not carry forward this. Similar to Diane, there was a lot, even though I didn't know anything from the state perspective per se, a lot I learned to the point where I heard words floating in the background from a former colleague of ours who was very fond of saying that it appears not all knowledge resides in Norwalk, Connecticut.
Thanks, Robert. Carolyn?
I support the staff recommendation because we are actively deliberating revenue and expense recognition. I basically hate for us to move forward with, this implementation guide and then later have a conflict with the conclusions reached in RER. So I agree with the staff recommendation.
Carolyn, thanks. Chris?
I also agree with the recommendation. I think there's a lot. The looking at it from the RER lens makes a lot of sense. But also, to Robert's point a little bit, our assumptions sometimes or our expectations or what we think the facts to be might not necessarily be the case. And there's always these different perspectives. So to take more time to better understand what's really going on from a holistic perspective and then make that determination as to whether or not these really are or aren't subsidies and how it all fits into the big scheme of things, I think makes a lot more sense than to move forward arguably a little prematurely.
Thanks, Chris. Jeff?
Yeah, I agree too for many of the same reasons that my fellow board members have articulated.
Thanks, Jeff. So I understand the proposal not to carry it forward. I don't know that the Q&A is necessarily wrong. I think from the state's perspective, it probably is 2 transactions, and this is probably the right answer. I could also see from the healthcare provider's perspective that they don't often see it that way, right? As the way they get a negotiated rate with the state, all of these different layers of funding might be all balled into one rate. They may not have that information. They may not see that. They may not understand it that way. So I could see how they would think it's one transaction, which makes then this not make a lot of sense. And I agree that the better place to address that probably is in some other kind of standard setting projects. Certainly aspects of that are things we'll talk about in the RER project, like what is a transaction? What's the perspective you should be looking at? When are things recognized, et cetera. So I think it makes sense to not have it in an implementation guide and address this issue for the healthcare industry. So I don't object to its removal.
Excellent. Thank you very much. And I'm going to pass it over to Roberta for 4, 2, and 3.
Okay, thank you, Lisa. So we are taking questions 4.2 and 4.3 together because they are related to each other. It's another area where our stakeholders provided us with a good volume of feedback, a lot of interest in this area. These two questions, they address donations received by higher education institution to be used for scholarships, as well as the related effect on published tuition rates. I think some of the volume of the feedback is related to the complicated nature of reporting in higher ed when it comes to things like some of the terms that were used in the question, and partly it has to do with the phrase and the close proximity of the words donations for scholarships. We were not trying to address accounting for scholarships, and the close proximity of those words caused, I think, our stakeholders to be responding in many cases to accounting for scholarships versus accounting for donations. And so there was a lot of confusion, I think, in their responses related to that. So we were trying to parse that and respond to that. And I was quite curious when it came back to take a look at what our final analysis was and to write up notes as to how to talk about it. It's like, oh, this is all we have? As we did, it really ended up us having to really talk among ourselves about all of the transactions related to this and subsequent transactions about higher ed world and how they would fall, and recognize that our question is really only addressing one small piece of this. And of course, they would probably like guidance on more of the pieces, but we can't provide that. Our discussions internally, of course, will support answering technical inquiries. There's potential for future questions related to that, but we wanted to focus on answering the question, clarifying the question that was proposed in the exposure draft to make the final question and answer as clear as possible. So with that, some of the things that they raised about it, right, we have the question, the definition of subsidies has two parts. There were different ways of agreeing and disagreeing with each of those criterion associated with that. Some people questioned whether it met that second criteria of lowering fees and charges, and also they brought in the relationship with Pell Grants. Again, another complication related to higher ed. Some of the things, and again, the complication with the word scholarships. And to talk about scholarships, granted, we're not talking about accounting for scholarships, but because they did, I wanted Ed to explain about the Pell Grants and relationships, because some of their questions related to that. Things about scholarships, the word is thrown out and used, but not all scholarships are the same. Some are student resources. We were using that term internally, student resources, as in they follow the student wherever the student chooses to go, what higher ed institution. And some are, I'm using the term application of university resources. So they come from the university gives it to the student that is going to that university. We still call them scholarships, but they're not exactly the same thing. summer university. So again, we have to be careful with the use of that word. Regarding Pell Grants, that is something that the board discussed. Those of you that were involved in Statement 103 might remember that was something included in the codification instructions. We had an existing question related to Pell Grants that had a little bit of, it was mostly focused on the fact that there is administrative responsibility. They should not be reported as fiduciary activities. There's really more an in and out related to Pell Grants. And there at that time, it was decided that they would be, prior to 103, it was decided they would be reported. One side of it would be non-operating revenues. After 103, per the board discussion, it decided it would be operating revenues. Kind of the idea behind it that those are really student resources. They kind of follow the student. And as in our internal discussions, we're using the words kind of portability associated with it. It's portable with the student. It follows the student. It's how this is, but it's a little bit different from other things in the notion that the university has administrative responsibility. So it needs to report this student resource as a flow in and a flow out. A little more complicated than other things. And that's why the simple idea of the university receiving a donation, it is not parallel to that. The Pell Grant has many more things going on with it. So that's why they can't, we shouldn't be likening it to Pell Grants. And as to the, and the idea that, to the simple idea that it wouldn't be it wouldn't fall out of the initial criterion is that, if we were talking about the simple idea of donations to a university that the university will ultimately use for scholarships, those donors aren't receiving goods and services. So that's pretty simple that it doesn't meet the first criterion in our definition of scholarships. As to the second criterion, as with the entire definition or most of the definition, other than the very third one, which is transfers, which isn't very conceptual, just added, but the rest of it is really conceptual in nature. Those words weren't crafted to handle the nuanced situations of something as complicated as higher ed. And that's actually the role of an implementation guide, is to apply it to these more complicated circumstances. And that more conceptual language didn't contemplate a difference between stated rates and paid rates. And that's what we have going on in higher ed, is stated rates and paid rates. And that's common circumstance. And it's not like a universal difference between all students. It's, it varies from student to student. It's even more complicated. And the donations that are used towards scholarships allow for these circumstances between stated rates and paid rates. And that's the basis by which it meets that second criterion. And we're trying to explain that it's the paid rate is the relevant rate for the purposes of whether the donation meets the criterion. Something else that was raised by the stakeholders is an argument that donations for scholarships that are limited to a group of students might be treated differently. We weren't convinced by that argument. We believe that those types of donations are the same things. They are resources given to the university for the university to reduce rates for, again, a group of students. So we don't believe that they would be treated differently. Some of the stakeholders, in addition to wanting other types of guidance, wanted the guidance to be extended to other donations, gifts, and contributions. Again, we're sympathetic to the idea that they want more guidance, but we are concerned with the idea that expanding it to, for example, all grants or donations. We don't know the character of all of those other grants or donations. And I was just thinking this morning, this idea of grants, sometimes when you think of the simple term, well, grant, of course, a grant by the definition all by itself, of course, it meets these, meets the first criteria. Grant by itself, that's like giving a government something and not getting
something in return. But then you get something like Pell Grant. Oh, there's a lot more going on there. Just using a term and expecting everything to have that same character, we need to be careful with using terms like that. So that's an example of why taking this term, like even donation, you think, well, what is a donation? Of course it's going to meet the definition. Well, someone's going to come up with an example of something that doesn't. So it's probably safer to leave it to stakeholders to analogize to these more specific circumstances. If their circumstance fits our circumstance, fine. Some also suggested that this should be provided as category A gap. We disagree that it needs to be in category A gap. It is the role, as we discussed earlier in the paper, it's the role of an implementation guide to take what's in category A gap and apply it to specific circumstances to clarify and explain and elaborate on those provisions. And we note that category B has the same level of due process as category A. We believe we're well within our rules of procedure for this type of item. And the final big area that they talked about was that the more common situation with donations is making the donation to the foundation that is related to the higher ed institution. We do acknowledge that is the more common route. That is also not what was exposed as the scope of what the question would be. So we feel like that's beyond what we can answer. We do note that we believe we do have some guidance for that. It's not the same level. In one of our illustrations in 2600-907 shows an illustration of a higher ed institution and its related foundation. We may have, the words we crafted in the paper didn't quite get it right, but the illustration does have it correct that shows how that donation and the subsequent flows work as far as the foundation, the component unit foundation reports the donations because its principal operating activity is receiving donations and subsequently making donations to the university. Those activities shows operating revenues and expenses, and then the university shows as a non-operating revenue, receiving that from the foundation and then taking it from there. So our illustration does provide guidance, which again, things we don't have the ability to include in the implementation guide, but something that's been discussed with staff that staff can use to answer any inquiries, and that any of our stakeholders that follow our discussions would know about, or that read our literature can find in our guidance. Okay. So on to what we did suggest to change. On page 24, we have both questions marked for changes. What we were focusing on doing with the changes is responding to, I think that the two primary changes is to, well, get the word scholarships further away from the word donations. I think it's more of a clarification of focusing, trying to get those words to focus more on what it is we're trying to provide guidance on, which is the donation. Less emphasis on the scholarship. Yes, acknowledge it as a specific type of donation, but focus more on the donation. And then we're putting a little bit more of the why when it comes to criterion, to the second criterion related to keeping future tuition and other charges lower. We're trying to put a little more meat because our stakeholders were asking the question why, so we were trying to put more of the why and to explain to those that were not agreeing with us. So we're hoping that clarifies things a little bit. And then we're trying to add a little more language as well to 4.3 to explain a little better about that relationship as well. So we'll take both together, or we're not taking both together? What?
We can.
Okay. Okay, with that, I will open up both question 2 and 3. Does the board have any observations or feedback on the proposed modifications to questions 4.2 and 4.3 of the exposure draft?
Thanks, Roberta. Board member comments, thoughts? Jackie?
I agree with the staff modifications. I think they do clarify some of the issues that were raised. I like the wording changes. The one suggestion I had made that might be helpful is that when we're talking about the Part B on does it affect the tuition or fees, to change that to net tuition and fees, because usually they use a contra account for scholarships, and it's really the net, the bottom number that goes down, not the gross number. So that might help them better understand what we're talking about when we talk about the reduction. But that was the only suggestion I had. Otherwise, I thought it looked good.
Thank you, Jackie. Just one thing that I wanted to say about that is that, and we're working on recrafting the very end of that sentence that you see that's underlined both in 4.2 in the answer and 4.3 in the answer. Really, when we think about it, it's not about how they're reported or presented that gets you to the answer of whether or not they're keeping current or future tuition and fees lower. Really, when I try to think about it and try to chunk it up as simple as possible, the way we see it is the donation comes into the university. Now it's a university resource, right? Because the university has received it. As a result of that, the student resources needed are lower, right? So the student resources are lower, and as a result of that, the university can charge lower tuition or other charges. So I agree, the way it's worded right now with that reported word tends to make you want to go down that road of thinking about the gross reporting or the net reporting. But at the end of the day, it's not really about that. And we recognize that. We're going to work on retooling that last line so that it removes that idea of reported.
Yeah, because I think that last line where it says received reduced the tuition or other charges reported
Correct.
is they're going to go, but it's not reducing my gross. I'm still
Correct.
charging the gross.
Right. That's exactly, we don't want to go there. Exactly.
Thanks, Jackie. Chris?
I also support the changes with the modification that you all noted. Similar to Jackie, I didn't call it net, but it was that actual kind of getting at the same thing and reading through the comments and seeing that seemed to be a place where people might be getting caught up. They looked at the published rates and they're saying, hey, that tuition rate that we published, it never changed. That's still the same number. But that's not what we're talking about here. We're talking about that actual. And so in my mind, I was thinking of it very similarly, right or wrong, as like a transportation authority that might receive money from the state in order to keep rates for seniors lower. And all of those seniors are going to pay $1 for their fare to ride the bus instead of paying $3 to ride the bus. And it's like a similar kind of scholarship thing where it's traveling through that authority, or in this case, through that institution and benefiting those individuals. The rates are still the rates. And this is essentially a subsidy that's going to keep those rates for those individuals otherwise than they otherwise would be. And so I think we were absolutely on the right path here, but I think it is in the tweaking a little bit of the language to help relate that back to the organizations that do have a little trouble in understanding what we're getting at.
Jeff?
So a couple of comments here. One, which, not having seen the language that's going to be changed, maybe perhaps this will address what I'm talking about. So in the analysis, right, you talked about the portability and portability of funds through the student. And when I read that, I understood it. And when I read your Q&A, I didn't understand it, right? So I think this line, that the higher education institution will use to award scholarships, I think we're getting at that notion of portability in a way that few will understand. And so I think we should, if we all agree that portability is the distinguishing factor here, traveling with the students versus not traveling with the students, that we should highlight that fact in what our response is, because that will really help the stakeholders with, I think, a lot of the questions that they had. And perhaps some of that will come through in what the edits you're making to make it clearer. Then my second question was whether in 4.2, the question, we changed individuals to parties. And whether now parties people would interpret that to mean foundations, which they had a lot of questions about. And so if the answer to that is yes, foundations, because in the analysis you're saying, well, we're really not addressing the foundations thing. But I read, well, parties, now I think we want the reader to say it's individuals or foundations. You're going to get the same answer out of both of those. So I just want to be sure that that's what we're clear about. And then the last comment is in 4.3. In the answer, we have this sentence added: published rates demonstrate the tuition and other charges that would be needed in absence of the donation. And the word needed, for what? What is that needed for? Is that needed for balanced operations? Is that needed for a slight surplus? Is that needed for, I think we might get more questions about what we mean by saying that would be needed in absence of the donation. And so I don't know how we finesse that or change that, but I think that we might get some questions with that.
Yeah, you had like three things there.
Portability was first.
Okay, yeah, portability.
Start with
So so the portability notion, yes, we talked about it in the paper. It really kind of addresses, it doesn't really address donations, and we're trying to answer the question about donations. That really kind of answers the questions we're not answering, and it also wasn't exposed as a notion. So I'm not sure we can embed that in the answer. It's kind of like for future. It's something that we've talked about. It supports our discussions about some of the other types of transactions in higher education, but I'm not sure we can embed it in the answer.
I guess I'll be interested with other board members, because I'm like, we got a lot of questions about Pell Grants, and I think people are going to walk away from this Q&A still going, what the heck's the difference with Pell Grants? And I don't know that.
Well,
if we're trying to whatever we do in IGS, we trying to create more understanding about what our guidance says.
Donations received are different from Pell Grants, and trying to embed why they're different from Pell Grants doesn't explain what to do. It seems like another solution for explaining Pell Grants. We answered the question for Pell Grants without an explanation. Okay, should we explain it in this question?
Well,
Right. So we have the existing Pell Grant question, and I think not to put words in your mouth, but it would be more appropriate to address the rationale for the answer that's given in question 7.72.10 in that question, or as a follow-up to that question, rather than try to add something into this question, which is really answering a different question, the broader, our donations for scholarships, subsidies.
Yeah, but I think our answer, isn't it, is that they're not portable.
No, that's not the answer for this.
That's not the rationale.
That's not the rationale.
That's the Pell answer, but that's not the answer for this.
Well, the Pell answer
the
is
portability notion is attached to the scholarship. It's not attached to the donation, right? And so this question, and a lot of respondents confuse that. We tried to make it better by putting the words further away, but this is focusing on the donation that's coming in. Now it's a university resource. The university now uses that resource to award scholarships to its students. But we're focusing in on the first piece of what's happening here, the donation.
And to add to that, the Pell Grant is not a donation for
Correct.
scholarships. The university is not going to use Pell Grant resources to award scholarships. That's not what a Pell Grant is.
Very different things.
But I follow that, but Jeff, maybe hopefully it helps. I follow that. What we're really getting at is we've made Pell Grants an exception to paragraph 14. Theoretically, Pell Grants a subsidy. We've said it's not because we've said it's not. We've not said anywhere why. I agree with. we have not,
It's student resources.
we have not
It's-
said
it's-
anywhere.
It's
we have
student
not,
resources with administrative responsibility. It's an in and out.
Roberta, policy, we've not said anywhere in a document why Pell Grant is operating revenue. We've not explained it anywhere. Right? That's what I
Right.
just said.
Right.
So, right? So because we haven't explained it, explain it here, explain it why portability isn't really relevant to a donation. It's relevant to Pell Grants. And so if we want to explain it, you need to explain in the Pell Grant scenario why Pell Grant is portable, makes it not a subsidy. So
And that's
portability
because it's
really is a
student
Pell Grant
resources.
related conversation. It's not really a donation related conversation.
Yeah, but that's why I still don't think it's not related. I get the argument that Pell Grants we got the Pell Grant answer we did because it's portable. We're getting the answer here because it's not portable.
So
Right, so portability still matters. right?
Jeff, just a point of clarification, it's not a subsidy because it's a student resource. And the way you identify that it's a student resource, portability is one consideration, might not be the only consideration, but the crux of it is not about the portability notion. It's that it's a student resource. It's not a university resource. So I think, I just want to make sure we're not
Right.
confusing.
And then
So
when
in
it's
my
a-
analogy, right, like if my mom receives money from the state and then she uses that money that she receives from the state to take her $3 transportation ticket and drop it down to $1, that's not a subsidy to the transportation authority. Like, so it's two different things, right? And what they argued in the paper, what those respondents argued is they said, hey, tell me how this is any different than that, right? But that doesn't, like, that shouldn't fit into this question and answer set. That could be a different question and answer set, but I don't think it fits in here. That was something that they were throwing out to say, well, how are these two things different from each other? And I thought the staff explained that, but I don't think that that necessarily fits into the question and answer set that's right before us right here. Not that it's not valid and that we shouldn't explain it more, to your point, but I just don't see how that fits into these 4.2 and 4.3.
I would say the point of the question is, what do you do with donations? If we didn't have the WIP for scholarships on here, would you worry about would you think a donation potentially could be portable or not portable? It's just a donation to the school. And so that's kind of to Chris's point, bringing that in, I think confuses it. The scholarships is in there, I think probably validly, because we're saying even a donation in this circumstance, which might get a little confusing, is still a donation, and that's still what we're doing. So that's why the 4 scholarships is in here, but that's not the point. I agree with Chris and the team that the notion of portability is better addressed either in a Hope Scholarship type question, which are other questions we're getting in the future, or an amendment to the Pell Grant question or something like that, rather than trying to bring that in here. Because this is about donations, which shouldn't be portable, period.
Because they're university resources once received. So it kind of all goes back to, is it university resources or student resources? That's the crux there.
Jeff has other things to address. So are we done with?
So
are
the
we-
next
are
one
we
was
good with that
parties.
one?
Parties.
Parties is
Yeah,
next.
Parties is next.
I was trying to make sure we're done. We're good. You
Well,
you were heard.
I was heard.
Okay. Parties.
Parties, yes, parties good. Parties from individuals, and yeah, right, it acknowledges broader
Same principle holds. for
donations
foundations.
from a broader range. It could encompass the foundation. But again, the illustration is the clearer way for them to understand. And then the troublesome sentence, which our GASAC member brought up, we've discussed it ourselves, and we actually have not resolved how we think it would best be.
We're working
edited.
on it.
Yeah.
The would be needed. Like, what is it needed for?
Yeah.
I think,
So I say, really, it's needed because the university needs to maintain the current level of services that they're providing. But we're also contemplating whether or not we even need that sentence, right? Because that sentence is just giving it's kind of validating, if you will, the first sentence in the answer. And we're going, do we really need that? So we're working on that.
Yeah, it seemed like maybe it was causing more problems than it was solving, which is a time-worn GASB solution.
I'll just put my 2 cents in the bucket of, I don't think it's needed.
Okay.
But the answer is in the basis that's needed to maintain services. That's what B40 says. So that's the answer. Whether or not that needs to be in the answer here, we'll leave up to you guys.
Yeah, yeah. And as we were
But-
discussing, it's in the basis, but it's not in the standards. So does it need to be in the? Yeah.
That whether it's in the Q&A is fair, but that ultimately is what we've said the answer was, to me, at least in the basis. All right. So we addressed your things?
Yeah.
So you're good?
Yes.
Ish? Okay. All right. Robert.
I agree with the proposed modifications. I read parties to include anybody, individuals, corporations, foundations, churches, whoever, any individual. So I think that was good. That the sentence, I would probably fall into the camp with Chris in terms of removing this sentence, because the only thing I can think about it in terms of how to change it would get it really, language would be very convoluted about would be necessary to support the operations of the institute. I mean, it just gets real wordy, and I don't think that would work. And then, the edits on both answers in terms of report, I was getting hung up on reported. So I would agree that we need a little work there, but overall, I think this is a good improvement that will help clarify things.
Thanks, Robert. Diane.
I agree with the changes that have been made. I appreciate the comments that Jeff brought up. I think these are good comments and good discussion. The proposed changes that you're talking about, that you still want to tweak certain things, I'm good with that. So I'm pretty much good with both of them.
Thanks, Diane. Carolyn.
I support the modifications that are proposed. I think they provide clarity and they're responsive to stakeholder feedback. And regarding the the sentence regarding as needed, I think that could also go away, because it does kind of bring in more questions and resolving answers. So that will be my suggestion.
Thanks, Carolyn. Robert.
I forgot one more thing. And again, this is probably, I don't want to be total wordsmithing, but in 4.2, if we say enterprise fund receives donations that are resources of the higher education institution to be used to award scholarships. Getting at the point that it's the institution's resources. Because I think in our conversation here, I think there's common understanding that's what it's intended to mean, but just take it for what it's worth.
Thanks, Robert. I agree overall with the edits. I think that they're responsive and improve the clarity of the Q&As. My one comment was really about reported, which sounds like you guys are trying to remove, because it made me worried, which is I think what you're trying to address, is that it becomes, or it seems to become, about what happened that year. Like how did it affect tuition that year? And the fact is, it doesn't have to affect tuition that year. It could be current or future periods, right? I could have received my donation in May, not use it for anything that year, but use it to reduce or use it to reduce tuition the following year, or for the next 5 years, or for the next 10 years. And so I like trying to take reported away, because I think it probably makes it seem like a current period thing. But otherwise, I think these are good at. So I look forward to the next tweak.
Excellent. Thank you very much. So moving right along, we'll now talk about question 4.4. So this begins on page 25 of the board paper. This question, of course, related to research grants and whether they met one criteria necessary to be a subsidy, which was that second criteria of keeping current or future tuition and other charges lower than they would be otherwise. It was not proposed to cover the first criteria, whether the provider was actually receiving a good or service in return, because the staff thought that was kind of a slam dunk, easy to determine, but it was really this second piece that was a little bit harder. And as you know, right, in the proposal, it really focused on whether the grant resources were used to offset operating expenses, things like salaries or lab costs that would exist in the absence of the grant to make that determination, which was why the answer was proposed to be an it depends. So many called this a hypothetical approach to the answer. As you saw, some respondents agreed with the proposed question and answer, but others disagreed. And so very similarly, I'll go through kind of the broad reasons why they disagreed and give you our counterpoint as to what the staff thought in our analysis. So the first kind of overall thing that we heard was that the guidance should be more explicit and not limited to research grants. So as we all know, right, the purpose of an implementation guide is to clarify, elaborate, or explain the provisions in a standard based on very specific facts and circumstances. And so that's what we were trying to do in the question. It wasn't intended to be the be all end all for all grants, because we know, wow, is that a wild card, right? There are so many different variations of grants and the things that we encounter in practice. So this was really intentionally limited to research grants. We did note, though, that whether a research grant, in fact, meets the definition of a subsidy is really not a yes or a no answer. The answer that we proposed as an it depends is, we thought, was reflective of the variety that existed in practice when you think about a research grant. And so the proposal appropriately noted that the conclusions would depend on the facts and circumstances that are presented for each individual research grant. Another thing we heard was that there was greater clarity that was needed regarding what is the level that I should evaluate this research grant at. Is it the higher purpose of a grant, or is it at a lower level, like the expenses that are actually being reimbursed for purposes of determining whether or not that research grant was a subsidy? And honestly, the concern here was that if it was that lower, more detailed level, then it really, in some cases, they felt could result in having to bifurcate the grant proceeds between pieces that were operating and then pieces that were non-operating. And some also questioned whether that application should be based on observable characteristics of the grant and its restrictions, or whether hypothetical scenarios like what would be done in the absence of a grant, which is what we proposed, would be appropriate. So in this regard, the team here, we didn't believe that the intent of Statement 103 was to evaluate how operations would actually change in the absence of resources. In other words, what we meant by that is that Statement 103 generally is based on maintaining services or operations as is, and whether additional resources like a subsidy would allow a government to keep its current or future tuition lower to provide those services. So it's really important to note that the relationship between subsidies and charges and fees was intended at the time of Statement 103 to be very broad and not specific when we were thinking about it, which is why we included this notion of indirectly in the language in that criterion. As we all know, rate setting for BTAs and these types of entities can be very complex, especially for our friends in the college and university space. So determining whether a resource received affects your current or your future rates directly or even indirectly can be very, very challenging. So to avoid confusion on that point, the project staff is proposing to actually remove the use of what respondents referred to as the hypotheticals, right? So specifically, that was the language in the proposal that indicated evaluating costs that would exist in the absence of the grant, in our proposed answer here in 4.4. We also believe that it may be more appropriate to convey that it will depend on the specific facts and circumstances for each research grant. And therefore, as a result of that, a government is going to be required to exercise their professional judgment when they're making the determination of whether those grant proceeds, in fact, directly or indirectly keep their future or current tuition and other charges lower than they otherwise would be. Also on this point, although the standard does not specifically discuss it, for purposes of presenting information as operating or non-operating activities, bifurcating a grant is not addressed in Statement 103. So we believe that if the grant is determined to not meet the definition of subsidies, then the grant resources received that reimbursed related administrative costs, for example, they would be operating as well, and vice versa. So it's a package deal, no bifurcation. But we will continue to monitor this issue because of the feedback that we got related to that proposed Q&A. We're expecting that the hotline's going to ring, that many may be asking this question with their specific facts and circumstances. So we will continue to monitor that, and just maybe it may be something for consideration in a future implementation guide for next year or maybe even the year after. The other thing we heard is that, hey, in the majority of these research grants, that the grantor is normally receiving something in return. They are getting a product, they're getting a report, they're getting a patent. So they were expecting that research grants would not meet the definition of a subsidy. One thing that should be noted is that this exchange is and should not be made on the basis of equal value, right? Because the definitions of exchange and non-exchange are not the basis for classification in Statement 103 in our definition of subsidies. And Statement 33 actually provides that labels that we commonly use for exchange and exchange-like transactions, things like fees, things like charges, sometimes are actually applied for non-exchange type transactions. So the labels don't always indicate that an exchange has actually occurred within that transaction. The biggest thing I think here that's important to note is that the proposed question only focused on one of the two criteria, which was 14A2, right? So as I said up front, it was only intended to get at an answer for, is it keeping current or future tuition and charges lower than they would be otherwise? As I said, we believed that whether a good or service was being provided was a more straightforward determination, but nonetheless, we acknowledge we wreaked havoc and probably created confusion because every other proposed Q&A was, is this a subsidy, that was considering both criterion and not just one of them. So you could see in our proposed amendments, we're proposing that the question and the answer address both of the criterion for whether or not it is a subsidy, similar to the other questions and answers that were proposed in the exposure draft. Another big thought that was brought up here is that the implementation of the guidance would create excessive burden on preparers, which I'm super sympathetic to, and that a simplified approach or presumption for research grants should be provided, particularly in the cases that involve a complex or a multi-source kind of funding arrangement, right? And so we really took that to heart and analyzed that. I'll use the right word this time, Joel. And as a result of that, we really look at this and go, hey, governments are already evaluating research grants to be able to recognize them appropriately based on our existing guidance right now, right? They're evaluating, is this grant an exchange transaction? where each party receives and gives up essentially equal value? Or is it a non-exchange kind of transaction where the government gives or receives value without getting something of equal value in exchange? They're also really determining whether that research grant, if it's non-exchange, is the government required to evaluate it based on the requirements in Statement 33? They are to be able to determine the recognition requirements, right? Like things like time requirements, purpose restrictions, eligibility requirements. So they're already making all of these determinations for their research grants already. Also, it's really important to note that many of the concerns related to a burden on preparers really were expressed based on the idea of having to bifurcate, right? Because that could be kind of onerous if you had to look at bifurcating multiple research grants. And it was really because of the hypotheticals that we had proposed in the Q&A in the exposure draft. So we feel that now that we've removed those hypotheticals in our proposed modifications, that it's going to mitigate some of those concerns related to burden. So we are not persuaded that there will be additional burdens for preparers as a result of the question and answer. And again, especially given the fact that this guidance is about presentation, whether it's operating or non-operating, the geography in that statement, and not really about recognition. We also do not believe that a simplified approach or a presumption of research grants should be provided, even in cases where it's more complex or there are multi-source funding arrangements, as these arrangements exist today. And again, this guidance is strictly about how these grants are presented and not how they are recognized. So as a result of all of that feedback, we are recommending that question 4.4, as proposed in the exposure draft, be amended as you see on the bottom of page 36 and the top of page 37 in your board paper. And so with that, I will open up board question 4, which is, does the board have any observations or feedback on the proposed modifications to question 4.4 of the exposure draft?
Thanks, Lisa. And to be clear, I like it when we analyze things. I'm submitting it to Webster. I'm going to attribute it to you. It's when you analyze and analogize
At the same time.
That's what we're doing. I like it. So, board responses to, bless you, question 4. Diane.
I like the changes. I like the fact that you now have both 14A1 and 14A2. I think it flows much better. My one comment is about the bifurcation. I feel like we need to do more in this response to explain that you're looking at it as a total grant. And the only thing I could come up with in that last sentence, if we could add the word total, it depends on the specific facts and circumstances associated with the total grant, that maybe that would convey better that it's not bifurcated. You're going to look at the facts and circumstances around the total thing. If there's better wording, I think that's fine. I feel like we need to do something that's more direct as far as the bifurcation.
So thank you, Diane, for that. We're gonna think and ponder on that a little bit more. I guess our only concern with that is that because it's not addressed in Statement 103, that could be dangerous. Our thought was maybe it would be more appropriate to continue to monitor it. And then if it does result in it being somewhat of an issue, come back in a future potential implementation guide with a question that specifically clarifies the intention of Statement 103 in that circumstance. We're fearful that without more context around that it could be a little bit dangerous, but we're going to think about it more. I just didn't want to give false hope on.
Thanks, Diane. Robert.
I agree with the proposed changes as well. I think making it consistent with the other questions is helpful, and highlighting the need to apply professional judgment in the revised answer should address many of the concerns. I also noted that the feedback from the GASAC this week for the ones who did provide feedback seemed very supportive of the edits. So I think that's appreciated as well.
Thanks, Robert. Chris.
So I agree with the changes as well. I think research grants are so tricky, right? Because it's not binary, right? It's not, okay, you got the research grant, so that means that you're this or that. It depends on so many factors like the reciprocal relationship and what's being exchanged. It depends on that organization making the decision to say, hey, we're only getting 75% of the related costs related to this research grant, and we're still going to have to kick 25% in, right? Or 50% or whatever. So it's not just, hey, this would keep rates otherwise than they would be. So the professional judgment is so important to include that in there, and the getting out of the specifics of the example given and taking a step back to the higher level, I think adds a level of clarity there. So thank you, and I agree with the recommendations.
Thanks, Chris. Carolyn.
This conversation has helped me. Well, at first I was a little hesitant on 4.4 moving forward because of all it depends and the professional judgment. But the conversation that it's going to be the question is narrowly focused on research grants, and that you're going to be paying attention to the inquiries that come in further, and if there's a need for an opportunity to bring back more implementation guidance in the future. I do like the modifications that were made, and then hearing the feedback from GASAC, I think they will get benefit from having this implementation guidance. So with all of that said, I do agree with the modifications, and I'm encouraged that we're going to be monitoring to see, what comes back from our stakeholders, because it does depend, it's not yes or no. And that was kind of like, well, is that really, is it depends really beneficial, but it does depend on the facts and the circumstances. So I changed what I sent you all, and I now agree with this question moving forward and the modifications that you all have proposed.
Excellent. Thank you. And I think you're right, Carolyn, right? Like when you read it, you go, oh, okay, how is this helping me? But it is packing the punch that it's not a one size fits all, that you're really going to have to use your professional judgment and look at your specific facts and circumstances.
Thanks, Carolyn. Jackie.
I was kind of actually where Carolyn was, because I was going, this doesn't really tell me anything. I'm supposed to use professional judgment. How am I supposed to use my professional judgment by the time we got everything out of it? I'm okay with the wording, but I'm like Carolyn, I'm not sure that it's all that helpful to those that are trying to look at it. The one thing after all the discussion I would comment on, that in the answer somewhere, you might want to put that this relates to reporting. Because the question does, but the answer doesn't use the word report in it anywhere, I don't think. And since they keep getting hung up on recognition versus reporting, somewhere in there you just might want to stick in the word report to clarify that. I also have a concern that they seem to think that because research grants don't affect tuition and fees, that we're home free on B. And I don't think that's true, because all we have to know is all the NSF grants that were cut this year, and all the colleges and universities that made cuts to their programs and everything else. No, their tuition and fees weren't raised because they couldn't raise them, but they cut their programs and their operation activities. So, the way they look at this, I think you're going to get, I'm going to be interested in what kind of questions you get, or if they just do we're going to count it all as operating revenue.
Jackie, what's the reported part?
In the answer where they talk about how this goes, I don't think the word report is mentioned in there anywhere. That this is related to how you're going to report your subsidies. The question does, but when they're talking about going through and all the discussion that was had, they seem to be conflating recognition and reporting in the comments that they were making back to the staff. And I'm going, maybe we need to put the word report somewhere in the answer that helps them understand that this just relates to reporting. It has nothing to do with recognition.
I'm just trying to understand a little bit more, Jackie. So in the question, we say they report as a BTA or an enterprise fund, but the focus is whether it meets the definition of subsidies, right?
For reporting purpose. They report as a BTA, yes.
Right.
But that's not talking about subsidies. Only relate to how you report the information on your financial statements. It doesn't have anything to do with how you
Recognize, correct. But I think the focus.
Hung up on the recognizing piece because they're wanting to go to exchange and non-exchange transactions.
Yeah.
It doesn't really relate to whether you report it as a subsidy or not as a subsidy. And that's why I was thinking that in the answer, if you talk about for reporting purposes or somewhere in there, that subsidies just relate to reporting purposes. They have nothing to do with how you recognize the transaction.
I guess I might consider, I understand what you're saying better now. Thank you.
Yep, I do
I
too.
might, instead of use the word reporting, because I tried to take it out of 423.
Presentation.
Or something like that, or
Yep.
for determining whether it's operating or not operating or something like that.
Right.
I think better than reporting, but
Right.
We'll think about it. Yeah, for sure.
thank you. I think it's you, Jeff.
So I think I'm at sort of where Carolyn and Jackie were. I sort of thought this, whereas I think the addition at the beginning of the answer to eliminate those questions about A1, I think that sort of narrows the effect. I think the rest of the answer doesn't really say very much. So I didn't think it was particularly helpful. I would support Diane's suggestion about putting something in there about bifurcation. I think we heard a lot about it. Lisa, to your point, if it's you sort of suggested it's close to the line, which I read to mean it may be category A, not category B. I don't know if that's what you meant. If that's what you mean, okay, but I guess the board could discuss that. But I don't think waiting for another implementation guide is necessary, because I think we heard a lot about the bifurcation burden problem here, like Diane is suggesting. So to somehow address it here, I think would probably be a good thing.
You guys chime in. I think part of it too is that we weren't comfortable saying in all cases and without the additional context that you mentioned, that just to blanket say you don't bifurcate might be misinterpreted. What are we bifurcating? What pieces are we looking at? And because statement 103 is silent on the issue, I think there would really need to be some context surrounding what do we actually mean by bifurcation when we say you don't do it in an answer.
Well, right. And we don't even know that there could be two components to a grant that are completely different, and it really would be appropriate to bifurcate them. I mean, we shouldn't rule something. It's hard to make a blanket statement about anything these days.
So I think in a future guide, we're not saying I don't think that it wouldn't be appropriate potentially for implementation guidance, but we would just need to establish the fact set and the pattern, and then be able to answer that in an appropriate manner.
Okay, thanks, Jeff. I kind of agree in part. Overall, I don't have a problem with what this says anymore. I had a little bit of the same concern of Jackie, Carol, and Jeff that it doesn't really say much, but the GASAC members, largely, there might have been one or two that were like us, don't really say much, but mostly seem to appreciate and agree with the question. So if it helps them, let's include it. It does no harm, right? So I'm good leaving it in because they seem to like it. So
Great, thank you. Pass it back over to Roberta.
Okay, on to slightly less controversial questions. Question 4.5 is on taxes imposed by a BTA. We did receive some feedback related to that, generally supportive, but they had some suggestions for how that could be clarified. There were two primary areas that we received suggestions about. First had to do with the word taxes, as seems to be the theme of the day, that any one particular word could be misinterpreted in some ways, in that transactions could be labeled taxes but not really have the characteristics of taxes. Transactions could be labeled something else but had the characteristics of taxes. So our literature actually does address that quite well in 33, that we have the guidance for derived tax revenues and imposed non-exchange transactions. We even have some discussion of substance over form there. So we think adding some of that reference to that particular area helps clarify what we mean by taxes in that particular situation. And then we also had some feedback of discussion of who's imposing the taxes, making it clearer that it isn't taxes imposed by outside entities, because they wouldn't be considered taxes. They would be considered something else coming in. So we've tried to add some language for that as well, to make it clearer that these are the taxes imposed by the BTA themselves, rather than taxes imposed by an external government and then reported as intergovernmental revenues or something of that nature. So we do have some relatively small changes to propose to question 4.5 on page 43. And question 5 is, does the board have any observations or feedback on the proposed modifications to question 4.5?
Thanks, Roberta. I think statement 33 does do a good job of requiring us to analyze labels to get to the substance of what the thing is.
At least they're not a lobster.
I'm sorry. You gotta have fun. Robert.
I'm not certain I can come up with better words today. That's okay. I'm supportive of the changes that are suggested. The comments expressed by the commenters about fees that are characterized as taxes are valid. I don't know how many times over the years walking through City Hall and hearing people at the counter paying their sewer utility bill said, guys, I'm here to pay my sewer tax. No, it's not a tax, it's a fee. The one question I had is the edit in the question to change imposed to reported. I wasn't quite sure why that was made, because that gets at, I get the edit and adding the statement 33 reference, but does it cause more confusion with those who are talking about outside entities imposing taxes that are then?
Well, we're hoping it wouldn't. It's kind of more editorial, because we don't want to use the word imposed.
Okay, that's I thought that maybe might be it, but
yeah.
But I mean, I don't like adding more words, but do taxes imposed and reported by a BTA, but I'm not religious on that. It was trying to be very crystal clear to those who would say, well, the county imposes the tax and then passes it on to the BTA. Whoa, that's not a subsidy. Or, I mean, it is a subsidy.
Thanks, Robert. Jackie.
I support the modifications too. I thought they were good. The only comment I had was whether or not it's necessary to include paragraph 7A and 7B of statement number 33, if just putting derived tax revenue, imposed non-exchange revenue in would be sufficient, because then it would align with an RER project going forward too, and this question would be valid even then. So that was my only comment.
Yeah, I think our only reasoning there was it gives them the reference to why they are derived or imposed non-exchange transactions. It probably is a little belt and suspenders.
Thanks, Jackie. Diane.
I'm good with the changes. I don't have anything else to offer.
Thanks, Diane. Chris.
Same here. I am very comfortable with the changes. No other comments.
Thanks, Chris. Carolyn.
And I support the modifications. The changes provide more clarity and are responsive to our stakeholders' feedback.
Thanks, Carolyn. Jeff.
So I guess the one thing I struggle with a little bit is the continuing inclusion of the word directly as it relates to directly receives goods and services. We heard from several commenters that directly is not in the standard as it relates to goods and services. And I think we're trying to get at something there in a way to make the answer technically correct, but not aid understanding, right? Which is like we heard the example of the whatever it was, like a water district that can have fees and also can levy taxes. It's a coterminous district. Everybody in the district pays the taxes. Therefore, they're getting the service, right? And I think we're trying to inject the word directly there to sort of suggest that this is two transactions, not one, but nobody's going to get that, right? And we're going to continue to have the question, what about my coterminous sewer district that's I can just raise rates or I can raise taxes and everybody gets my services within my district. And so I'm sort of torn, like, do you take directly out because it's not in the standard, or if you're going to leave directly in, explain why you put directly in. That's my comment.
Well, I'll just explain why we included it originally, and you can decide whether you continue to include it. This idea of taxes, and services of a government, the idea of certainly taxpayers receive services from their government, but it's kind of a more general relationship rather than a direct relationship. And that was the idea of putting directly in there, because taxpayers in general receive services from the governments that they pay taxes to. It's the lack of a direct relationship that we were getting at there. And that's why we included it in that situation, even though it wasn't in the standard.
I think what maybe the commenters were getting at is this in the circumstances that they're talking about, I guess they see it as pretty direct. You're getting taxed by a water district to provide water. And so therefore you're paying for water and you're getting water, right? Even though it's coming through the mechanism of a tax, but they were saying it could have just as easily come through a rate. Like this is just what the government's ability, how they have the ability to raise revenue. So you're hinging it on that, but the services, so you can continue to wonder why we say no services are provided. That's why I would say, hey, if that's what we believe about directly, we should say that, right? Just to address what people have commented to us about.
We also yesterday heard the rebuttal to that, right? That it's not a direct relationship just because the same customer is paying a tax. The tax isn't based on how much water or whatever they've used. It's based on the value of their property. The direct relationship is I pay for the water I use and the tax isn't doing that. And so I think the word directly kind of helps me understand the relationship the way Roberta kind of described it.
Other stakeholders don't get it.
But some did, right?
So also, Jeff,
I think they got the context in which we were talking about it, right? The commenters we got didn't have the benefit of that context. So we're hinging it on the word directly. And if you understand the context, you get what we mean. If you don't have the benefit of having been in the room with the people and you're trying to read this thing and understand why they injected directly there that doesn't exist in the standard, you don't necessarily know what that means.
I would argue directly is clear enough, and to try to explain it would add a whole lot of stuff.
Yeah, and the only other thing I would add there, Jeff, is that they didn't get the benefit of this new addition, right? Which clearly says it has to be a derived or imposed non-exchange revenue. So I think that addition is going to help clarify some of that to narrow what types of transactions that we're talking about here.
Thanks, Jeff. I believe the additions help clarify it and are responsive, and I don't have any objection.
Okay, on to the next question, which is passenger facility charges. We had some good feedback in this area as well. Passenger facility charges, some questioned the relevance of evaluating them as subsidies. They were thinking them as more of other non-operating revenues. I'm thinking capital contributions because they believe that they are all capital related. Staff agrees that most of the projects that are funded by PFCs are going to be capital assets of airports, but we know they are allowed to be used for things that do not end up being capital assets of airports. For example, I think like soundproofing of properties nearby airports isn't allowed use for it. So just we can't make a broad statement that it is always used in that area. So we still believe that subsidy is the right way to evaluate these particular things. We had some stakeholders that didn't agree with our assessment of the relationships here, and that they were fees, or that it would lower fees of the airport. We still continue to believe, and our airline representative or airport representative on GASAC did also agree with our evaluation of the relationships of the parties associated with airports and airlines and these fees that are charged on passenger tickets as far as meeting the criteria of 14A2. There was some discussion among the stakeholders of the insertion of the word directly. We have the word directly in that criterion 14A1. People listening are probably like, we just throw around 14A1, 14A2, and we all know what we mean by that these days. But anyhow, again, it's the word directly is not in the standard, but we included it in this language because it was helpful to clarify the relationship between the parties, because we have this complicated three-party relationship between the airport and their customer, the airline, and then we have the and the airline and their customer is the passenger, and then the fee that is on the ticket that is paid by the passenger, and then the airline pays, collects it and transmits it to the airport. And we thought using the word direct there was helping explain that situation better. We did receive feedback that it was whether or not it should be extended to similar fees, such as airport customer facility charges. Apparently, they've been extending the realm of these charges. We believe it's best not to add that or other types of similar charges to this particular question. Again, not knowing the exact details of them, we believe it's best to leave it to stakeholders to analogize to those situations. If those particular fees do have the same characteristics as these passenger facility charges, they can analogize to this question and report them the same way. That is perfectly appropriate. And others requested more classification or more clarification on the classification as capital or non-capital. I think they were suggesting maybe that be embedded as part of the answer to the question. Our approach to implementation guidance is to answer one question at a time. And we do have questions on how subsidies should be classified. We do have a series of questions on capital and non-capital subsidies. And would probably be best to considering adding a cross-reference to them. And I think as we discussed somewhere in the paper that is something that we will be considering at the pre-ballot stage, as we did had some other feedback from stakeholders suggesting additional cross-referencing within the document, and we will be considering that. We think that's probably a good idea in this particular situation. We did have some feedback, as you recall, from our GASAC representative, and he did provide more detailed guidance, and perhaps something you might want to provide. We do have more. His language is a little more simplified, not quite as detailed about the relationship. I don't know if we will certainly consider whether it should be simplified. Again, it's a hard thing to explain to all people, and I'm not sure all stakeholders fully understood, so I'm not sure about that. But he did have a concern about likening them to taxes. So I wouldn't mind hearing your feedback on whether removing the language of similar to taxes would trouble you or not, or whether you believe that we should continue to include that language. That was one thing he was suggesting in suggested edits. So we don't have much in the way of suggested edits. We were just trying to make it clearer what the relationships are by, changing parties to passengers in some cases. So we didn't have a lot of edits based on that. So with that, I will pose question 6. Does the board have any observations or other feedback on the proposed modifications to question 4.6 on the exposure draft? And then again, I would invite also comments on whether the suggestion of whether it's necessary to link it to the taxes discussed.
And Roberta, just for additional clarification, we had it originally linked to the taxes question as kind of the key rationale, right? Drawing those parallels about how those circumstances are similar. So that's why that linkage was there originally.
Thanks, Roberta. I'm thinking about the taxes question. I more or less, I would be okay if we just kind of dropped it. I mean, the answer explains itself, but if we wanted to keep it, I wonder if we change it from taxes to imposed non-exchange transaction, or call it whatever 33 calls it, as opposed to calling it.
Right. Maybe something similar to, yeah, those addressed or similar to just tying it back, keeping the link to the question and answer, but removing the word taxes. Is that sort of where you're going, Joel?
Yeah. I mean, because it's not a derived tax, I don't believe.
No.
So it would be an imposed
Right.
non-exchange revenue. So if we just called it an imposed non-exchange revenue, like question 4 point whatever, we could, it probably seems less onerous to him, because that is an accurate statement. It's not a tax, but it is that. And so maybe that would make them feel better about it, but keep the link. I don't know what others think, but that was my reaction.
I think the link is important. I mean, if we were going to keep the word taxes in the first clause, I would eliminate the edit of the deletion of fees to distinguish, but I'm okay with just the reference and to impose non-exchange revenues.
Jackie.
I'm support the amended wording. I think it's fine. And that was all I was going to say, except now you asked me a question, so I've got to say more. I'm fine with actually deleting the sentence on taxes, because I think that the rationale stands on its own for why it meets the definition of a subsidy. I don't think it has to be tied back to taxes, but I'm fine with it either way.
Diane. Thanks, Jackie.
what Jackie said. I was going to say the same thing. I actually think the adding the tax stuff is a little more confusing because I think it does stand on its own. I'm glad you incorporated changes, or you're going to incorporate changes from our airport expert and get the right language and everything. But in the I guess the first sentence, we do use the word imposed, so it kind of relates it back. But I just think it's more confusing having the linkage. Also, I was going to mention the comment that was made about specifying capital subsidy. And to me, when I read that, as far as in the comment letters, it seemed like that they were saying that because they determined, or their thinking was that PFCs were always capital. And so wanted us to specifically state, okay, this is going to be a capital subsidy. Linking it to question 4.7, I don't think is really necessary, since it really is not always defined as a capital subsidy. It could go either way. So I kind of have some concerns about making that link also.
Chris?
So, following up on Diane's comment, one thing that I continue to get confused with as we explore this area that I'm not very familiar with or comfortable with is this idea in the respondents' comments that they could go both ways. And so with that, would it make sense to say non-capital subsidy, since we, by default, if it could go both ways, right, we say non-capital, right?
No, but PFCs are assessed for a very specific project. The FAA has to approve it for a specific project. So it will be known what type of project it's for. It is limited to a particular project.
Right, but I guess I'm just trying to understand if the facts and if it depends on the facts and circumstances, and we don't put the specific fact either way in our question, just trying to understand how our question and answer should reflect that it could go both ways based on what's approved.
Okay, you're saying
right?
it'd be confusing to reference to them because it could go both ways.
Because it could both ways. So I'm just
Okay.
asking the question, like, is it worth a clarification, or is that too confusing? Because it can go both ways, right? And that assumption that it's always capital might not always be the case. So should the fact pattern be specific to one way or the other to kind of just drive the point of a specific fact pattern going all the way through to conclusion?
Well, I think we have other Q&As, right, that get at that point where we say, hey, it's really based on whether the provider limits your use of those resources for a capital related purpose. So I think this question is really just intended to address, is it a subsidy? I think the presentation of it as non-operating or non-operating non-capital versus capital is addressed in other questions. I don't think we should put the two together. Let's just answer the one question in here, which is it a subsidy? Let the other questions basically answer whether or not it would be considered a capital or non-capital subsidy. Because it really is a two-step process, right? You identify, is it a subsidy? Then you say, okay, well, now that I know it's a subsidy, is it capital or is it non-capital based on whether there's a restriction in place from the provider?
So
I
Lisa,
do wonder if in the drafting, we could look at like referencing to a section, right? I just need to look at the draft and what we could reference, like see also questions and answers related to determining the classification as capital or non-capital, as a nod that is the second part of this, but not, to a specific Q&A, to Diane's point of it's capital, where the answer says this is capital, but just to the section of questions that talk about assessing, making that classification.
Yeah, and I think we had lots of feedback, right, from respondents. You saw it throughout this paper with a lot of the questions, basically wanting to cross-reference, them all. And kind of as Emily just stated, the approach that we're taking is once we develop the pre-ballot draft, we'll look at that and see where that makes the most sense as we develop, look at the codification and where they're all going to be placed and whether or not that in fact might aid people if we make the cross-reference.
Thanks. And my second question just relates again with not being too comfortable or knowledgeable with this specific topic is related to what's actually being approved, right? And so we talk about, by definition, what subsidies are, but are there, similar to where we were when we were talking about research grants, right? And so do airports have the opportunity to take those passenger facility charges and they'll do stuff that maybe they otherwise wouldn't have done, right? So it really kind of doesn't keep charges lower than they otherwise would be. Hey, we're doing this beautification project because we want to try to bring people in, but if we didn't get this this money from through these additional charges, your airport would still look like it did back in 1982. So I'm just trying to understand, right? Because that's a differentiator. If you're doing it because it goes to the safety or security or whatever, that's one thing, right? But if you're doing it because you got this extra money that you were able to charge and it's going to I guess it might be very similar to the point that, and I still can't get it out of my head that I might have made in the last meeting around that discretionary kind of determination there. I don't know.
No, projects are, it's not, they just have an ongoing tax over and over. They have a project and they're allowed to tax to fund the project.
Right.
Projects get approved by the FAA. If they didn't fund it through the tax, they'd charge the airlines. These are projects.
But I guess, is that an assumption? If they
No, it's
didn't.
the law.
Okay. Because I guess that's what I was trying to understand. So like, is there ever, like, if you're an administrator, there's okay, we're going to try to get this through this because we know they're not paying for it. So we're going to try to get it here. Right. And so if that's the case, then it's not.
How it works, any project that an airline wants to do or an airport wants to do, they have to find the funding. If they want to do anything, they have to get it in the airline leases or they have to get it in their PFCs. That's where they get their money.
Right. I understand that. I think I'm asking a different question, but I don't think it's.
Let's say, Chris, the basis would tell you it's to maintain services, right? And so what you're getting at some point, you could say, is any capital subsidy ever meet this description? Because if I didn't have this, would I just not do that capital project? What forces you to do a capital project to maintain services? And I think that's just, in a way, a hard question to answer, but it's something they've planned to do. So in other words, they've built that into, for whatever reason, they've built that into their services. And as a result, if they didn't have this funding mechanism to pay for those, to continue those services that they've decided to do, then they would have to raise rates in order to do it. I kind of understand the queasiness, maybe because it's capital related as opposed to operating is a little more clear. Got to provide these things. This is what it costs to provide this stuff. The capital seems a little more discretionary. And that's a little hard, but I think we have to kind of play along. If any subsidy can ever be capital, then it's going to be a step in the direction you're kind of worried about.
All right, that's fair.
I mean, for what it's worth, Chris, I think I struggled with your same point in other contexts. Like, for example, when I thought about the research grant question, and I thought about if somebody comes, I'm a university, somebody comes to me, it says, hey, and we'll just assume it'll be non-exchange for the time being. I want you to do this. And because you're funding it, I will do it. In other words, I won't do it. I wouldn't do it if you weren't funding it. I wouldn't raise my rates. I wouldn't do that stuff. But because in conversations with the team, things finally gotten it's this notion of the trickiness of maintain services. It's not maintain. It's really, if I agree to do it, I'm providing services, and therefore those services are subsidized, right? And that's why you're asking it in a different context, but I was having that same struggle about if I wouldn't do it otherwise, how can it be a subsidy, right? So
I like your point there. Like if I agree to do it, then it's a service, and then this service that I'm providing is ultimately being subsidized. So that's fair.
Carolyn.
Question 6. Okay. I support the staff modifications, and regarding the question on taxes, yeah, I think if we could remove that, it will just take away unnecessary questions that we're not trying to answer. So I agree with it. I think we should remove that.
Thanks, Carolyn. We heard from everybody except me at this point.
Oh, me? Oh, yeah, you.
Yeah. Overall, I agree with the question and the edits we've made. I can kind of go whatever you guys think is best. As long as we change taxes to impose, I'm okay leaving it. I kind of feel like it stands on its own as it is. So I would be okay if we just took the whole phrase out. And we'll defer to you guys on the linking, but to me answers the subsidy question. Whether it's a capital or non-capital is addressed in other Q&As. At some point, we can cross-reference every question. It seems a little excessive. I kind of like Emily's idea of doing it to a group as opposed to one, which might infer that it's more that than the other, and when we're really talking about all of it. But I also might just be okay not doing that. But we'll see what it all looks like when you put it all together for next time. The only other thing, which I know we talked about, but I'll highlight, and I know you guys are thinking about, I had some sympathy for the respondent that wanted to capitalize passenger facility charges because the FAA capitalizes them. It's an actual program, and I think that might eliminate some confusion. But you guys were going to look at that with Reagan and see how do we typically style-wise deal with programs like that. So we'll see what you guys come up with.
Absolutely. It's on our list. Awesome. Okay. Thank you very much. So that brings us to question 4.7, which begins on page 49 of your paper. This question, of course, related to how subsidies other than non-capital subsidies should be reported, and that capital subsidies would be reported as non-operating revenues and expenses. So respondents generally on this question agreed with what we proposed. Some that did agree offered up some suggestions for some clarifications or improvements on this proposed question and answer. They recommended the addition of cross-references, as we've already discussed. They also recommended additional disclosures to distinguish between recurring and non-reoccurring capital subsidies. And we'll just note on that one that providing this type of information is not within the scope of Statement 103, and therefore we don't believe it should be added to this question and answer. The final recommendation was to specifically refer to paragraphs 11 and 12 of Statement 103 in the answer, which you can see we have incorporated that suggestion in our recommended edits on the bottom of page 50. So with that, I will open up. Oh, no, one last thing I did want to mention based on GASAC feedback that we got on Monday. There was a comment made about how the answer talks about how these types of subsidies that are capital subsidies, and how I think the comment was made that we were creating a new term here, I think was how it was worded. And I'll just note that the team doesn't really feel like we're creating a new term. It's actually in our prior guidance. It's in the question and answer that we're proposing to modify in the old question 4.5, which is 5.1 in the proposed implementation guide. So I would just wanted to mention that. And then with that, I will open up question number 7, which is, does the board have any observations or feedback on the proposed modifications to question 4.7 of the exposure draft?
Thanks, Lisa. Board responses to question 7. Diane.
I'm good with the changes.
Thanks, Diane. Chris.
I'm also comfortable with the changes and the use of capital from that response. And I acknowledge hearing the same comment that you did, Lisa.
Thanks, Chris. Robert. Check.
I agree with the changes.
Thanks, Robert. Jackie.
I support the staff changes on this question and answer.
Thanks, Jackie. Carolyn.
I also support the staff modifications on this Q&A.
Thanks, Carolyn. Jeff.
I'm fine with the changes.
Thanks, Jeff. I am good with the changes. I think it is responsive and makes it a little more clear.
Excellent. Thank you very much. We are cruising now. That brings us to question 4.8, right? That begins on page 51 of the paper. And of course, this question related to how subsidies should be classified if the provider of the resources limits the use of those resources to debt service for capital related debt. And of course, the answer proposed was it's a capital subsidy. The limitation is capital in nature. So the feedback here, like 4.7, respondents generally agreed with our proposed question and related answer. Some that agreed offered up some suggestions for clarification or for improvement. I think the biggest one was, hey, can you clarify how the provider of that resource, if it's an enterprise fund or a BTA, would classify the subsidy? And you can see in the paper that we vetted how we would answer that question if we got it. But that really our intention was to focus on the receiver of that resource when it's a BTA. And so we have made some amendments to the proposed question and answer to really highlight and focus in on that we're talking about the receiving side of the transaction and not the provider side. We also received some feedback here related to cross-referencing, which we've already mentioned that we will consider with the pre-ballot draft. So with that, I will open up board question number 8. Does the board have any observations or feedback on the proposed modifications to question 4.8 of the exposure draft? And before you start answering, I again would be remiss if I didn't bring up some GASAC feedback on this one that we heard on Monday, which we were asked, how would this relate if it was an internal service fund, right? Which was, we've talked about it, the team has talked about it. And right now we're thinking we would expand this question to not only be a BTA or an enterprise fund, we would say a BTA or a proprietary fund, which would then encompass this idea if there was a circumstance where it wasn't in an internal service fund. So we heard it when we think we can be responsive to that GASAC member feedback by making that small change in the question. So with that, I'll bring the question back to the board.
Thanks, Lisa. Board responses. Jackie.
I support the staff changes. I think it really does clarify where the focus is on this. And I think that the change to proprietary funds makes good sense.
Thanks, Jackie. Robert.
I supported the original question, but I think adding proprietary makes a bigger tent. So
thanks, Robert. Diane.
I also support the staff changes and what Jackie and Robert said.
Thanks, Diane. Chris.
I support the changes along with the additional modification.
Thanks, Chris. Carolyn.
I support the changes and also support being responsive to the GASAC members' feedback and making that change.
Thanks, Carolyn. Jeff?
The changes as proposed seem good to me.
Yeah, I don't object to the changes.
Awesome. Thank you very much. So that brings us to question 5.1 in the paper, which begins on page 53. And of course, this question related to how subsidies should be classified if the resources are used for the acquisition of capital assets, but the provider of the resources did not limit the use of the resources to the acquisition of capital assets. And of course, the answer proposed is that it would be non-capital because there was no limitation being placed by the provider. So this is another one where respondents generally agreed with our proposed modifications. Some that agreed, again, provided some suggestions for clarification or improvements. The first one was, hey, clarify how this guidance would be applied to transfers that do not have external limitations. And I guess what we would say here is that statement 103, specifically paragraph 14C, specifically indicates that all other transfers are to be considered subsidies. So we believe that it's evident that transfers do not have external limitations would be classified as non-capital. Remember, this one is an amendment to a previously issued question and answer. So it's really important to remember that the principal purpose behind the original question in the 2025 guide was to convey that it's the intent of the provider of the subsidy, not the recipient, that's critical in making that determination of whether a subsidy is capital or non-capital. And honestly, we really believe that together, the suite of the questions here that are in this guide, also these modifications, give the comprehensive guidance for circumstances where subsidies would be classified both as capital and as non-capital. There were some cross-referencing comments brought up as well. You can see based on the feedback that we received, the project staff is not proposing any modifications to proposed question 5.1. So with that, let me open up the last question in our paper, which is, does the board have any observations or feedback on proposed question 5.1 of the exposure draft?
Thanks, Lisa. Board responses to question 9 related to the one amended Q&A. Chris?
So related to that specific question, I don't have any additional feedback, but more so, I just want to make a general comment regarding observations related to the IG, just in general, but specific to the IG team. So the other night, I had the opportunity to sit down with some PTAs at dinner. And one thing that and we were talking about a lot of different things, career paths and all of that. But one thing that they said they were super surprised about since joining the GASB was that we have this deliberative process and that it's not just for show. And so, I think what's evident is in almost every single question you guys brought up, oh, the GASAC member said this, and this is how we modified it. And, these individuals and respondents said that, and this is what we're considering. And that's so important and integral to what we do and why we're a trusted standard setter. So I just wanted to highlight that you all do such a good job of listening, and then not just listening, but application of what you're hearing in order to make it work for everybody. And that's something that I don't think everybody really appreciates enough, that process that we go through. So thank you for that.
Thanks, Chris. Jackie?
I support the staff decision not to make modifications to 5.1. I learned very early on that when we're amending an amendment question, you don't go through and change the whole part of it because I tried to do that when I first started on the board. So I support 5.1.
Thanks, Jackie. Diane.
I support the changes that staff made originally and haven't changed it since, so I'm good with that.
Thanks, Diane. Carolyn.
I support the staff modifications.
Thanks, Carolyn. Robert.
I support the direction we're going with this.
Thanks, Robert.
I'm fine with this.
Thanks, Jeff. Yeah, I don't object to this either. And I'll echo Chris's comments about all our projects, not just the implementation guide, but including the implementation guide.
Excellent. Thank you very much. And so at the next meeting, we will be bringing before you a pre-ballot draft.
We have to actually get them to, we have to get them
Oh,
to say
that's
that.
right. I'm sorry, Alan.
That's
I
okay.
really jumped the gun on you.
No, that's okay.
I got so excited. I just jumped the gun.
I was going to try to use the word you used earlier and I just forgot how to say it. So I'm not even going to try it. Analyze. No, but I do think the last thing we have to do is ask the board if they have any objections to us bringing them a pre-ballot of the implementation guide at the next meeting. And so, Joel, if you're okay with that, I just, Jeff.
I do not object.
Chris.
I do not object.
Diane.
I do not object.
Carolyn.
I do not object.
Jackie. Robert.
I do not object.
Mr. Chairman.
I do not object.
So now,
So now with that vote, Alan, I can officially say that at the next meeting, our intention is to bring before you a pre-ballot draft, which will be marked. We'll have one version obviously marked for changes from what was in the exposure draft, so you can clearly see. We also will be bringing before you consideration of the effective date and transition provisions, and some analyses and discussion of potentially the comments related to the delayance. I also would be totally remiss if I didn't extend two great big thank yous. First one to Roberta, because as we all know, she's retiring and this is her last board meeting. And God, she's been involved with Statement 103 since the beginning, leading the charge. And then, of course, also this applicable implementation guide. So thank you very much, Roberta. You will be missed, but we know where you live. And then, of course, the second thank you to Jeff, because you've been on this journey with us since the beginning of Statement 103 as well. So we thank you very much for all of your feedback and encouragement and guidance along the way as well. So thank you.
Thanks, team. That's it for the implementation guide. We have one last topic. Last but not least, our going concern severe financial stress project. Let's take a break and we'll start that at 10:45. See everybody then. All right, welcome back. On to our last technical topic for this board meeting, which should be a really fun discussion. Our going concern severe financial stress probable dissolution project. Deborah, I'll turn it to you if you'll start us off and what we are going to be talking about today.
Great, thank you. Good morning, everyone. So for the past couple of meetings, we have been working through the disclosure requirement for severe financial stress disclosures, which is trying to decide what governments should be required to make those disclosures. And so we have a tentative decision that governments that would be required to make the severe financial stress disclosures would be ones that meet any one of three criteria. They are either insolvent, experiencing financial difficulties such that they are nearly insolvent, or probable of being insolvent within 12 months. And for this meeting, the project staff is seeking some clarification from the board on certain points associated with that tentative decision that will help provide direction for us as we continue to move forward in this project. So the first point that we wanted to clarify is what may be a potential contradiction with the TBD as it is currently written. So it is currently says that governments would make severe financial stress disclosures, but some of the governments in that criteria would not actually be in severe financial stress. So governments that are insolvent or nearly insolvent would be what we've been calling in severe financial stress. Their condition is very poor, what we've been calling nearly insolvent based on the severity of their condition, not the time to insolvency. But there are governments that are probable of being insolvent in 12 months, but are not yet over the line of being insolvent or nearly insolvent at this point. We've been referring to those as the second yellow cars in our diagram. We would say that those governments are not in severe financial stress, but are in the severe financial stress disclosure requirement. So we expect that those governments are going to be relatively uncommon, but we do think that they do exist. And so we have this potential contradiction here for governments that are not in severe financial stress, but have to make severe financial stress disclosures. And so the first big picture question that we want the board to discuss this morning is, should governments that are not in severe financial stress make the same disclosures as governments that are in severe financial stress? Or put it another way, should this forward-looking assessment of is it probable that they will be insolvent be part of the same disclosure requirement as being already insolvent or nearly insolvent? Now, there's a bit of a chicken and egg component to this discussion because we haven't yet discussed what those disclosures are going to be. We have the proposal that was in the preliminary views. That's our starting point. But of course, things are open to further discussion, changes when we get to that point. The disclosures that were in the preliminary views were developed for a government that's in a condition of severe financial stress. And so some of those disclosures might not be relevant or applicable for a government that is not yet in that condition. And on the flip side, there might be additional disclosures for a government that is not yet in that condition, but at risk of becoming insolvent, that we would have to consider further on. So on this question, we heard some different viewpoints from GASAC the other day. Some GASAC members thought that there should be the same disclosure requirements, saying that treat these governments that are probable of being insolvent the same way as if they already were. And others thought that the disclosures should be different, saying that the distinction between being in a condition and at risk of a condition are different situations, and that does matter for disclosure purposes. So what the board believes on this first big picture question will take us down a decision tree. From there, we will either proceed to question 2 or 3. But I wanted to talk about the branch options so we can consider this somewhat as a whole. So if the board believes that governments that are probable of being insolvent in 12 months should make the same disclosures as those that are already insolvent or nearly insolvent, the 2 options underneath that are to either expand what we say nearly insolvent means, or to rename this set of disclosures. So near insolvency, which was the way we had phrased it in the preliminary views, we had said was about the severity of a government's financial stress. It did not relate to a time component of how soon a government may or may not go all the way to insolvency. Now, we could change that in these redeliberations if that's the path the board wants to go down. So the disclosure requirement would be governments that are insolvent or nearly insolvent would make these disclosures, and then nearly insolvent would mean either experiencing these severe financial difficulties or probable of being insolvent. The other option down this path is to come up with a different description for the disclosures that we're considering in this part of the project. Rather than calling them SFS disclosures, we could call them something else. As far as how we had been calling them SFS disclosures was primarily just to distinguish them as being part of this part of the project, as opposed to the probable dissolution disclosures in the other part of the project. And what term that would be, we would talk about later if the board wants to go down that path. The other branch of the decision tree is if the board believes that governments that are probable of being insolvent but not nearly insolvent should make different disclosures than governments that are. And the two options down that branch are to either have the forward-looking assessment as a separate disclosure requirement or not use a forward-looking assessment as part of a disclosure requirement at all. So to make it a separate disclosure requirement would recognize that there is a distinction between a condition and a risk, and that there is different information needed based on which situation a government is in. And then to not have that as a disclosure requirement would essentially drop the second yellow cars out of the circle in the diagram, which, given the fact that that's probably a very small number, may not be worth pursuing a separate disclosure requirement for a very limited number of governments. And so that is as far down the decision tree as we're going to talk right now. Before we open it up for discussion, I'm going to have Eniola give us the task force feedback on question 1.
Thank you. Please note that all task force feedback came from preparers and auditors. No users provided feedback on this paper. So for question 1, task force feedback on this question was mixed. Some members think that being in a condition is sufficiently different from the possibility of being in a condition in the future that users would want different information. Other members do not believe that governments that are probable of being insolvent in 12 months, but not nearly insolvent by severity of financial stress, should be required to make disclosures at all, but would choose the same disclosures if they do, because they believe that Statement 102 is sufficient to cover the risk aspects for that very small population.
Thanks, Deborah.
So I guess I didn't actually ask question 1.
Sure.
Now that I realize that. So we're starting at the top level. Should a government that is probable of being insolvent in 12 months, but is not nearly insolvent, meaning by severity of its financial stress, should that government make the same disclosures as a government that is insolvent or nearly insolvent?
Thanks, Deborah. Jeff.
Since my last go around, I might as well go first, right? In response to question 1, this is not my preferred outcome. Folding it into the existing definition of near insolvency and thereby leading to the same disclosures would, to me, eliminate the distinction from the situations of these governments, right? And thereby, and I understand we haven't described what the disclosures are, but just functioning on what you had in the PV as a framework, the reader would not be able to understand why that government's making the disclosure necessarily as one being because of the forward assessment as opposed to being in the condition. And I believe, and I think I heard support for this from some at GASAC, that would be essential information for users, that they would want to know that distinction. So to merge it all together and put it under one set of disclosures. Now, it's possible a government may describe the situation, but they wouldn't have to, right? Reasons and causes or whatever. You could just describe what it is, and I wouldn't know if that's because you're in a condition or that's because you are at risk of being insolvent in 12 months. So that's why this staying with question one for now, that's why this is not my preferred outcome.
Jeff, can I, so if I look at, and I'm going straight chicken or egg right off the bat, right? If you, understanding that we haven't redeliberated the disclosure requirements, but if you look at the disclosure requirements for SFS, reasons and causes, evaluation, the government's evaluation of the significance of those actions taken, known effects, is there really something different you want to know about a government that is making the disclosures because they met the forward-looking assessment, other than you want some version of that fact stated? Like the fact that what triggered them making whatever these disclosures are is that they triggered the forward-looking assessment. It's probable there will be insolvent within 12 months. Is that the only, or I won't say only, the main distinction you see between the two different disclosures? Or is there other fundamental things? Or you think these disclosures that for the condition just don't make sense in the assessment?
Having not had the opportunity to think through them for this context, I'm not entirely sure they're fit for purpose, right? So I think I ought to be careful here because I don't necessarily think, number one, we're talking about potentially idiosyncratic situations. So I can't say, well, in all these situations, it fundamentally works like this. I can't say that, right? But I do think part of me says, to be honest, I fundamentally want to have an idea of the fact.
Mm-hmm.
So that information to me is valuable, right?
Makes sense.
But I'm not prepared to say that's the only reason,
okay,
right? That's the only thing that I get out of that. There may be, I won't be the beneficiary of the deliberations, right? But there may be other things as we as a board think about this situation and what would we want to, governments to communicate in that situation, that it may not track exactly with what we have as for those being in the condition, right? So it's a little chicken and egg, right? But that's the best answer I can give you.
Thanks. Diane.
So I'm where Jeff is. I do not want these to be the same disclosure. I think it throws the governments that are not nearly insolvent into that same bucket. And I think it could be misinterpreted that way. I think that, and I know this is getting a little bit ahead, but I think that if a government is not nearly insolvent and 12 months out probable that they're going to be insolvent, then I would like to see the disclosure patterned after 102, because I think it's the same kind of concept that for a government to go from being not nearly insolvent all the way to insolvency in 12 months, something is triggering that makes it probable, because probable is a pretty high bar. I don't want to see the two mixed. I think we've done a really good job on that nearly insolvency and making that determination, and keeping this a separate disclosure, I think is really important.
Throw two things at you, Diane. I understand. In a way, you were Jeff was you're a little further than Jeff in what you just described. You kind of think you've thought through the disclosures at least a bit, and you think they're kind of different things you want to know. Jeff's uncertain if there's different things, but you both agree you want the distinction of you triggered the assessment, that's got to be part of the disclosure. That's important. I agree with that part of it. The rest of it, I have tried to think about the disclosures. I'm struggling at least with how are they really going to be different, other than they specifically need to note that. And I'll point to one GASAC member's comment that concerns me a bit and that I tend to agree with, and then maybe an example situation that's actually real that may or may not be applicable. I kind of think it is, but you guys can tell me. Our bond rating person, credit, why is the name not rating agency person? Well, at the GASAC meeting said he, as a user, he really just couldn't contemplate, however, whatever your condition is now, if you are 12 months from insolvency, to say anything other than you're in severe financial stress didn't make sense to him. And I kind of buy that too. I have a little bit of a hard time. I understand the theory of it, that technically right now you're not bad, but it's a high likelihood in 12 months you'll be insolvent. To not call that severe financial stress, even though technically you're not in it right now, I struggle with a bit as he did. So then let's look at a real situation. This is a tobacco settlement corporation, blended component unit, but separate legal entity, so component unit. If you look at their financial statements as of, this was, I think it was let's just say 9:30. I think it was 9:30. You look at their financial statements, they've got like $17 million in cash, which equals almost 100% of annual expenditures. So they've got, 100% reserve in fund balance. Their fund balance actually increased during the year. Revenues exceeded expenditures. So I don't know. Look at the statements. You would think entity is not financially stressed. They seem okay. They had, though, that's this tobacco settlement thing, they've been paying pretty much interest only, very little principal along the way. And 18 or 17 months after year end, but only 7 months after the audit report date, they had a big principal payment due. So that auditor didn't look at it continued existence of that entity. That auditor looked at going concern and said, that's a going concern. Because from the audit report date, at least, which whether or not they applied 56 right, I won't, whatever. From the audit report date, they're like, they're not going to make that debt service payment. They knew, management knew it and they knew it. And in fact, that did ultimately happen. They defaulted a couple of weeks ago. So they put the going concern on. In a meeting with the rating agency, we kind of talked about this report, and the rating agency said, yeah, good thing they had that going concern disclosure in there because we didn't have any idea. And so I don't know if that's really relevant. It feels relevant to me because I look at the financial statements. I wouldn't say they're in poor financial condition, but they knew it was probable 12 months from availability be issued that they'd be insolvent, and they were right. Not calling that severe financial stress, not wanting to understand, well, what caused it? Like, what caused my ability? Well, I would have to explain, in this case, the cigarette sales are going down, so revenue hasn't kept up enough for me to build up my fund balance to make that big balloon debt service payment that I knew was scheduled. I would want to explain that. To me, that's reason and causes, that's evaluation. I just struggle with them being different, except for this one point that I do agree with you on, that I do want a distinction made that if you've triggered the assessment, that needs to somehow be incorporated into the disclosure. I don't know if you have any reactions to that.
You want
Sure. Okay, so my reaction is that when I think about this, I think about that finite period of being in SFS versus that look forward period. And so that's what, to me, that's the distinction and how it's characterized in the disclosure. Because in the disclosure, the forward looking, it's going to talk about future events. In the SFS, it's talking about those events that are occurring right now that have occurred up to the time that the financial statements are issued. And so in your example, see, I would see a different disclosure for the 12-month look forward, because that would be, okay, so in this example, they knew about the payment that was coming due. So that could have played into that SFS analysis. But if there's something that is out there that's really probable, but it hasn't happened and it's not putting them in SFS, that's where I draw the distinction.
And I would say also not to not to necessarily get caught up in nomenclature about whether or not that government's an SFS or not, like in the way most people in the world would consider SFS, like, because you could argue yourself into that condition, into that point of view. I think what's important is that the essence of what's going on here to me is different. Because we've heard a lot in our discussions, we've been talking about this slow, most of these governments that get into duress, it's a slow thing, right? And that to me is the condition aspects of it. At some point, your slow deterioration gets you into the SFS condition because you've just hit enough of those markers that you agree about this. This other one's fundamentally different. Something rapid is happening. And because you're not there. And in the case of your example you're giving, it was rapid. It may have been foreknown, but it was rapid, right? And so their revenues were rapidly declining and their debt service was rapidly increasing, right? And so that to me is a different disclosure, right? Users going to want to know because the situations of those two governments are, to my mind, very different. And so I'm going to want to know that. And when we think about disclosures, I view it as it's a separate evaluation by the government and therefore a separate disclosure by the government, right? So that's how I see it as different.
Thank you both.
Can I ask a quick follow-up question on that? And not to poke at it, because it's an example, but would you not think in an example that they knew the balloon payment was coming years ago and knew that tobacco settlement revenue was falling years ago and knew that at some point, and probably knew exactly years ago, they knew they weren't making that balloon payment. So in that scenario, I don't see that as something that just happened out of the blue. In that scenario, I would have a hard time in that scenario thinking in our framework we're building, I have a hard time thinking in that scenario, they weren't SFS as of year end.
That was going to be my point.
Like I think they were nearly insolvent as
they
of
were
year end,
near.
which might not make it the perfect example. Maybe it's not the best example for Joel's analysis, because I wouldn't think that was a unknown thing. That was probably well known. And I think what Joel's trying to get at is the numbers and the financials might not have told you that, and might not have shown you that, and you might not have known that. But it is an example where, and maybe that's the problem. Maybe they would be nearly insolvent, and therefore that's not really the question on the table. Because the question on the table is you're not nearly insolvent, and but you're 12 months from insolvency. But right, so I do think there's a distinction that just because the thing happens after year end or after the audit date, you would have known in this case.
If your next debt payment or your next tobacco set, whatever it is, payment is going to leave you insolvent, then you're near insolvency as of that. That's literally the next one that you have to make 3 months down the road after the financials are issued. To me, I see that as like your condition as of issuance is such that you're near insolvency. So I acknowledge your point, but I think that scenario that you provided for me is the condition is really met as of, so it's not one of these rapid, to Alan's point, it's not a rapid, it's a, you were already
So
there.
we would distinguish then our, Florida example of property taxes might be voted to go away if in between the financial statement date and the available to be issued date, the vote happens, and it's going to happen. That's akin to my tobacco settlement thing versus the votes after available to be issued, and I'm assessing the probability of that thing. That's the only time we're triggering the assessment.
That's how I saw it, that afterwards.
I do too. And I think the key is the level of that probability that we're looking for. It's probable. There's something really big. It's like the triggering event in 102. And that's why I think of it that way, because there's something that's happened. There is an event.
Right. I mean, if we go back to our diagram, that green car, like your car in your example, I just don't believe that it's green. I believe that it's yellow as of the issuance date. Because I think that the condition, I think it's near insolvency. Again, the point is that it's near insolvency versus the other example that you gave, which was.
You think it's the first yellow car, not the green car? Or you think it's the first yellow car, not the second yellow car?
Yeah.
Yes.
I think you're already over there.
Yeah.
Yeah, but I think we ought to be careful, right, with the scenarios we're talking about here, because it could be the case, and I don't think the tobacco one is the best example, but I'll use the tobacco one to go with it. But you say they had 17 million of reserves. What if the tobacco payments came in 15 million under debt service? In other words, you had the reserves to cover, and you're paying annual debt service, right? So the difference between 15 million, or if they come in 19 million under, I default. If they become 15 million under, I make it, and I'm good for another year. And that may have been my biggest jump in debt service, right? So it's not, I don't view it as necessarily, oh, you could see this coming. It was a fait accompli. These guys are in SFS. It's you can pretty close to the line. You could put them in SFS or not in SFS, right? So it's not a given to me. And that's the distinction between this, something's going on rapidly, and it so happened that the revenues really plummeted in that period. And so we couldn't make it, right? But that's why it's not like at the end you couldn't say that they were SFS, right? That's why I hesitate to use the nomenclature, right? But it's like, is the situation different? And I view the situation as being different and therefore needing of a different disclosure.
Chris?
So I think I'd say no to the question. And by no, I think that there should be separate disclosures to Diane's point and to Jeff's point. I think we worked really hard, and this is not being, I don't think it's being like stubborn and we did all of this work already, but we worked really hard to, as the team said, the project team said, we differentiated a condition from a time period. And I really like that idea of staying with the condition. And if we add a probability based on a time period close to, I think that's separate. I think something that happened in the GASAC meeting on Monday is we heard a lot of people conflating the two based on maybe a little bit of a lack of understanding of what the intention was. But there was a lot of near insolvency. Yeah, if you're 2 months away, how you're not going to be? But it's not but again, it's not necessarily about the timing. It could be in most cases. And I think that was something that was said by people, like, it's highly unlikely that you're going to go from 0 to 100 within this period of time but it's a possibility and it can happen. And that's, I think, what we contemplated when we, wanted to just stick to condition here and in thinking about this projection of this likelihood going forward, or the probability going forward. So, and then to your other question, Joel, that's the foundational piece of information that I need. You said, what do you want to know? Like how you got here? I think that is important. But to Jeff's point, I probably haven't thought about it enough to know if there's anything else that might be important to know as part of it. But I do think that that's the anchor big thing that separates the two. And then the separation just from the idea of, I think it's really good to help get people, keep people organized and on the right path to say, this is based on this condition, and this is based on the projection or the probability of where the determination that this is where we might be over the next 12 months. So I like the idea of keeping those as two separate things and then working through what are the related disclosures, and maybe they're 99% the same, and we'll get to that point. But for right now, I like the idea of separating them and then seeing how we move forward.
Thanks, Chris. Jackie?
I also said no on this. I don't believe that they will necessarily be the same type of disclosure for the reasons that have already been indicated. We've got a condition assessment and we've got a risk assessment, in my opinion, because the forward-looking one is a risk assessment, like 102 assessment. And I think that they could very likely end up with having different types of disclosures as a result of that. We have not looked at time. We have not looked at the probability to even think about what kind of disclosure we would want, other than in a 102 type of disclosure, which is basically what I said. I think that should be like a 102 disclosure. So they could end up being 99% but they could be very different because we haven't really even looked at that to think about it or to talk about it. So I think that they need to be different. And I really think that we got like three kinds of disclosures here now. We got one that has happened as of the financial statement dates. We've got a subsequent event that happens in the interim until it's available to be issued. And then we've got a risk assessment 12 months later. I mean, this has grown to from what it started out being. So yeah, I think that we're creating a whole new opportunity for us here.
And Jackie, I'm not disagreeing with what you said. So but I think what some of the GASB members were saying the other day, and I'm not saying they're right or wrong, but I think some were saying is, why don't you just rethink the definition of what FSF is and broaden it? And why not just broaden it to something beyond just a condition, which I understand y'all might not want to do. But if you broaden it to a condition, then the disclosures and all the stuff down the street become less complicated. I think they were balancing those two things of saying there's a trade-off. If you merge them together, maybe it's less complicated. If you break them apart, you got more disclosures. Is that more complicated? So I think some people in GASB were just saying which trade-off is the right trade-off. And I think folks were on both sides of that fence yesterday at GASAC.
I will point out, I think more users were on the different side. Yes, we heard from a user, that it was the same. I heard many more users saying they're different. So I just be careful not to put too much weight on one particular user as opposed to the other ones in general.
I think I was trying at least just then to not actually say which side people fell on. I just would say that I think that was the discussion, right? Because that's really at the heart of this discussion is, would you expand the definition? Yes, and if you did that, less disclosure would need to be made. If you don't expand the definition, you might have more disclosures. That's really the crux of what we're really trying to decide at the moment, right?
Yeah, I mean, it comes, I think, a little bit to what Chris was talking about, because I think, and what I was saying before about careful about nomenclature. You go to the man on the street and you say, are you 3 months from insolvency? Are you nearly insolvent? Yeah, but that's not the situation we're describing here, right? Or are you in SFS? Well, yeah, but I think to the what we're trying to get here to the type of user who would benefit, the sophisticated user who benefits from the notes here, is that there are distinctions here that should be kept separate. And that's what I was hearing more of than the ones who were saying, well, yeah, it's the same thing, just mash them together.
Robert.
It's good to go after you hear a lot of the conversation. I've learned that after a year. Oh, no, not always. Diane actually explained probably where I was at best of where of everything that's discussed. I wouldn't call it no, but I think it's separate disclosures is where I'm at. And I think there is a distinction between the current condition and something in the future. And I like the way that you described. I mean, I think I'm also getting that the risk assessment, the forward looking is more akin to a statement 102 thing versus right now. And when I looked at the fee, I mean, I got my notes from the other day with GASAC. Almost everyone who commented were users. There were a couple audited, but I didn't catch anybody that what I would call a peer preparer per se. And again, it isn't a vote or whatever, but even the individual talked about, if you're probably within 12 months, aren't you nearly insolvent? But he wasn't, and he said same disclosure, but I'm not certain that really was. I can't read into what was being actually said, but the other individuals who were speaking were getting to the point that Jeff's making, is there's a distinction there. So I think I would concur with that, and we concur with what I've heard from the other board members, that I think there needs to be that distinction, because, and then I get into, well, then what's probable of happening, and then they're getting into that time frame, and I think there's a distinction between now or even at the financial statement date versus the 12 months. And that's a divide that I think calls for separate. I'm not sure exactly what quite yet, but.
Thanks, Robert. Carolyn.
when I was writing out my responses, I had initially written that no, they should not be the same. But then I was thinking, but if we come up with a new term other than SFS, then I could, without knowing what that term is, I was willing to go along with the team to go out and get feedback from stakeholders, do a similar process as they did when they came up with the probable dissolution term, because that fit better of what we were getting at. So in the end, I was supportive of having it, the situations, not having separate disclosures with a more descriptive term, which I think I'm in the losing side of this discussion, but I sincerely understand where my colleagues are coming from. You know, the condition is certainly different from the risk of the condition, but I was willing to see if we could come up with a better description of this bucket of circumstances. And it really was like a 49-50 split for me. But right now I'm still, you know, I haven't heard anything that would, I mean, I've heard some really good feedback, but I still haven't heard anything that would make me move from that position. So that's where I am.
Thanks, Carolyn. So it doesn't really matter, I guess, how I vote. I'm very I kind of don't know how to vote in a way, because I generally, 99% or whatever, I generally think they should end up being the same. I mean, we keep talking about 102. All 102 says is disclose enough information to give the reader, you know, an understanding of the nature of the situation, and then to describe the concentration or constraint events that have happened, or the events associated with it, and then actions taken. This doesn't sound all that, I mean, it's different words, but you're kind of getting at a lot of the same things that the SFS disclosures, at least as proposed, require. I just worry we're making, for the subset of the small subset we're already dealing with, we're going to end up making it too complicated, and that most people aren't going to understand. They're going to be more confused than they are helped by having two separate things that are both talking about insolvency described differently. Like that distinction, that nuance, I think is important to us. I'm not sure it's important to everybody. I might have heard a little different things from users than you did. Maybe it was because I was hearing what I wanted to hear. That being said, I agree. The fact that you trigger the assessment should be disclosed. So technically speaking, can they be the exact same? No. So I don't know if that means I'm answering no, but barely, or I'm answering yes. But I think there should be a distinction between them. I think it should be a minimal distinction, I guess, and then maybe we'll see where we go from here. Half-hearted yes, I guess.
No, I guess.
Well, I don't know. It's a half-hearted yes or no. I don't know.
I think we need an actual vote, one way or the other.
If the question is, should they be the same? No, they shouldn't be the exact same. But I'm really worried how it's going to play out from here.
All right, so given the responses to question 1, we will not be talking about question 2 because that was the other branch. And so we'll go on to question 3, which is again, looking at, all right, if these are not going to be the same, should there be a separate disclosure requirement, or is it apply to so few situations that it's not worth actually having a separate disclosure requirement and dropping the second yellow cars out of the disclosure requirement. And so I will have Eniola give us our task force responses to question 3.
Yes. Task force members prefer no disclosure requirement over a separate disclosure requirement. They believe that Statement 102 would cover the rare situations in which a government is probable of being insolvent in 12 months, but not already in a very poor financial condition. They also express concern that a disclosure that a government is probable of being insolvent is inconsistent with Concept Statement 7.
And so with that, I will ask question 3, which is, should information derived from a forward-looking assessment be part of a separate disclosure requirement or not part of a disclosure requirement?
Thanks, Deborah. I'll answer first that we should have a disclosure requirement. So that means I'm answering they should be part of a separate disclosure requirement. And to the 102 point, not all risks are covered by 102, even though the examples we come up with have largely been concentrations. That doesn't mean they will all be that. And so I wouldn't want to rely on 102 as a reason to not require disclosures here. Jeff?
I agree with what Joel just said. I also think that the information that users will get from this will be found to be essential.
Thanks, Jeff. Diane?
I also agree that it should be part of a separate requirement, and I think the task force comment about it being inconsistent with Concept Statement 7, we worked through that with 102. I think we work through that when we work on the disclosure.
Thanks, Diane. Jackie?
Well, I'd like to drop 12 months altogether, but that doesn't appear to be an option because I think that that's an issue altogether with where we started out with this project. So yes, I think that if we keep going with the 12-month disclosure, it needs to be a separate disclosure. We can't ignore that we are having them do it and then pretend that there's nothing to disclose on it if they do the assessment. And like I said before, I think that this could end up with more than one because I think we've got a subsequent event type of disclosure that could happen with this too, as a result of us extending the date from the date of the financial statements to the date that they're available to be issued. So, but yes, I agree that we need a separate disclosure.
Thanks, Jackie. Chris?
Very similar space to where Jackie is, but not to relitigate. We are where we are. But I do think it's important to have separate disclosure. And we have to think about it from the standpoint of the government and separate disclosure requirements, because I think that the fact pattern is fundamentally different, right? When we're talking about the condition versus the risk assessment. So we need to make sure that there are certain things that you want to convey in both, and we just need to make sure that we capture all those things. I don't know, again, how different they might look, but that's for the next step. So I don't want to be presumptuous and say, no, they have to be the same because they're going to be the same. And we just kind of don't know it yet.
It's Chris. Carolyn?
Because we went with no in question 1, then yes, I do believe that we should have separate disclosures.
Thanks, Carolyn. Robert?
I'm on the fence on this, and maybe part of it in Comrade. I remember maybe Diane, you said you worked through the issues on the Concept Statement 7 in 102, and maybe I need a primer on that, on how we got to that point, because that's the part that I'm struggling with, and obviously task force members had a similar issue. I'm struggling with that. I'm saying not a separate disclosure requirement.
So no disclosure requirement is what you're voting for, correct? All right, that's everybody, yeah?
Can I just, so Robert, you think that the current disclosure requirements are going to cover whatever you need, or you're just saying know you do the assessment, the risk assessment, but you don't disclose anything. I just want to make sure I understood what you were saying.
Yeah, I think there's a conceptual issue here.
We can't say what we're saying in that disclosure.
Yeah.
From a conceptual standpoint.
Yeah.
Gotcha.
Is that all of us?
All right. So even though we've said that the forward-looking assessment would be a separate disclosure requirement, it could also still be part of the SFS disclosure requirement as a way to help identify governments that are nearly insolvent. So it wouldn't be an absolute indicator. That would have been a question, well, had we gotten to question 2. But it could be in the guidance as either a rebuttable presumption or a regular indicator. A rebuttable presumption, it would say if the government is probable of being insolvent in 12 months, we presume that they are nearly insolvent unless there is some evidence or reason to say otherwise. A regular indicator would say that a government that is probable of being insolvent may be nearly insolvent, but that would be on par with the other example indicators that we have in the guidance about if a government is nearly insolvent. It could also be that a forward-looking assessment is not needed as a way to help identify nearly insolvent. Either one of those options, the rebuttable presumption or the regular indicator, does creep in some element of time that we were perhaps trying to stay away from. On this question, we heard some mixed feedback from GASAC this week as well. Some liked the idea of the rebuttable presumption, making that one indicator more important than others. Some liked the idea of it being a regular indicator, not making that one more or less important than others, evaluating the totality of the circumstances. And some perhaps don't want it to be an indicator of near insolvency at all. If the same information they're going to use to make this forward-looking assessment is the same they would look at for whether they are nearly insolvent otherwise, perhaps it is not necessary to add that in. And so we are going to ask Eniola for task force feedback on question 4.
Task force members would prefer that a forward-looking assessment not be used to help identify governments that are nearly insolvent, but if one is used, they believe that a rebuttable presumption would be a de facto requirement that does not allow for variations in different circumstances, and they would support it as a regular indicator.
So question 4 is, should a forward-looking assessment be used to help identify governments that are nearly insolvent? And if so, how? A rebuttable presumption or regular indicator?
Thank you, Deborah. And Eniola? Jeff?
So I think where I get to this is where what Joel was talking about before, right? Where you were talking about muddying the waters. And here we've been talking about it as 2 separate things. And here now, to me, if we go down this path, either of these 2 paths, we're muddying the waters. We're now saying that this thing is now, it could be why you're in the current condition, and it can be why you're in this risk of insolvency. And that to me is a lot of mud. I also think that, even contemplating this path, like a rebuttable presumption, boy, I was like, rebuttable presumption, unless there's evidence to the contrary. Well, we're going to have example indicators about what represents evidence to the contrary, because I'm sure governments are going to ask us, what's evidence to the contrary, right? So I didn't see the value of going down this path. And even if we go down the path, I saw it as being difficult.
So you're saying no, they are not Has nothing to do with this.
We're keeping the two concepts separate. The evaluations are separate. You do an evaluation of current condition, you do evaluation of 12-month risk.
And so if you were a government, which the vast majority, or I'll say the majority of governments and the majority of governments that are 12 months from insolvency are probably in severe financial stress. We're saying that it's a unique circumstance where you're 12 months from insolvency and not in severe financial stress as well. A lot of us have said that that's a small subset.
It could be,
but
right?
in then absent those small subsets, we're going to have a disclosure about, so a government is both. Let's say a government is both. They're going to have a disclosure that says you're in severe financial stress, and then they're going to have a separate disclosure in a separate paragraph or labeled something different or whatever it is that says we're 12 months from insolvency. Because you just want them to be separate. They're not related to each other, even though they end up being related to each other normally in practice. Practically, you don't want them related to each other. We have separate disclosures and they're just going to be separate. Even when they have both.
In the cases where they have both, then you're going to have to do two.
Okay.
But I don't think I think there's going to be cases where it's one, not the other.
Gotcha.
Right.
Okay. Sure. Diane.
I'm same place Jeff is. I think there should be two disclosures because ultimately I do believe that forward-looking assessment, every government should have to make that assessment. And, so if they're insolvent, if they're nearly insolvent, they're going to have the two disclosures. But if they're nowhere near it, then they're also going to need to make the assessment. They may not, and this is when we get to disclosures, they may not have to do a disclosure, but I do believe there has to be two separate disclosures.
Thanks, Diane. Chris.
So I'm a little lost here. We're on question 4, right? I thought we already asked the question about two separate disclosures, and I thought this question was more, can you use the forward-looking assessment to inform what your current condition is?
Or should you?
Should you?
That is.
Yeah, I think to me, it goes right to the example, Joel, that you provided before. So you do this forward-looking assessment and you say, hey, we're not going to be able to make this big giant lump sum payment in 60 days after the financial statements are available to be issued. Hey, let me just take a step back and assess whether or not I'm actually currently in or nearly insolvent in severe financial stress, right? So to me, I think just by basic design, when you're doing that assessment going forward, it can help you inform your current condition because you look going forward and you say, oh, wow, I didn't think about that when I did my assessment. Maybe I need to reevaluate my current condition based on what I think is ahead. So to me, I say that you can use the one to inform the other. And I would expect, and I wouldn't want to tell people, no, you can't. How can you tell people, no, you can't? You looked at this, you saw this in the future, but you can't use those inferences to make a determination about where you are now. To me, I think they kind of go hand in hand. And I think it's completely separate from the disclosure issue. Yet, two disclosures I completely agree with, but using one to inform the other, I think is okay there.
Wouldn't you get there though from just your SFS analysis? That, I mean, do you need to, because we could have different criteria for that forward looking for the 12 months.
Yeah, I guess I'm saying I don't know what the criteria is and all of these things, right? One of the things, and the criteria has to be anchored in something as of and that might be to Robert's point a little bit with Con 7, how we made sure with 102 that it was anchored in something that triggered as of whatever date, right? So I don't know what all of those things are right now. And so not knowing all of that, I'm going to say, of course you can look towards that assessment that you made and evaluating where you are as of this present day, because I wouldn't want to leave those out.
Can can I build on what you're saying or see if I'm hearing you right? If I went through a government and I was doing my SFS determination and I went through the 15 indicators, well, the PV, I think about 15 indicators. And let's say in this particular government, I got 4 or 5 of them that they meet. And the preparer is sitting there going, well, did I tip the scale and now I'm nearly insolvent? And I don't really know. And it's not obvious that I am. It's not obvious I'm not, right? And I'm sitting there going, well, I don't know if I am, I'm not. And the auditor's going, I don't know if you are or you're not. But then you turn around and say, but you're 12 months from insolvency. Could you not use that as a tipping point to say, well, those 5 indicators meant I was right there on the edge and I wasn't sure if I was or not nearly insolvent. But if you didn't tell me I'm 12 months from insolvency, you just tipped me over. You just made those 5 indicators have more weight or have more value because that probability assessment just told me those indicators are probably a little more of a higher indicator or a larger indicator than maybe I thought they were. And it's like what you're saying is you'd want to look at that, look forward in relation to those indicators that you knew existed, and that might put you over this, might tip you over the scale, and therefore make you say you're nearly insolvent. And that look forward is kind of what tipped you over the edge. And you wouldn't want to not be able to do that. If I'm hearing what you're saying, right?
Yeah, it's like one additional identifier. What I want to be careful of is, again, we were clear that it wasn't a timing thing. So it's not because of the time, it's because of potentially whatever was identified in that look forward. It could be or it could not inform, but not just purely based on time, that just because, but depending on what it is and the very nature of what it is, maybe it adds extra weight to my condition as of this point where you're right, it's the extra grain of salt or whatever that's going to tip the scale in the direction.
And
see, I view that as different. That's not the time to insolvency. That's the event thing in 102, and we want to add that as or you guys, not me. You want to add that as a potential example indicator. That seems fine. I wouldn't add the 12 months to insolvency as a potential indicator because now your description of nearly insolvent has to change, which we already decided wasn't a good idea because that wasn't about time, and this thing is about time. So you're pulling out a piece of it, Chris, which I'm not disagreeing with you on, but I wouldn't take this 12 months to insolvency forward assessment and drop that in there precisely because then it muddies up. And I wouldn't see, to Alan's point, what are you gaining? I'm getting the description on 12 months to insolvency. Do I really need another description about SFS? I don't care if it informs SFS. I've talked about it. They're different. I want the description because you're 12 months to insolvency. I don't know that I'm going to get a whole much more adding 2 different disclosures, probably talking a lot about the same thing because from what I'm hearing, they're probably going to largely overlap. So I don't need that. I just need one. I mean, I think the interesting thing, and we heard some from GASAC, is how do you sequence these things? Like, do you have them do the 12 months risk one first? And if you're in, you do that. Where we heard other voices say, do the SFS one first. And if you're not in that, then do the 12 months to insolvency one sequentially. And if you do it in that manner, you're covered. I don't think you need to overlap the 2 and create 2 disclosures where 2 disclosures aren't going to really be very helpful.
And maybe I didn't describe it clear enough. What I was suggesting is and I don't want to go into too many examples or name too many indicators, but I could have some indicators, let's say related to structural deficits, related to operating deficiencies, or related to use of my reserve, how much my reserve is, right? Then on the face of those, they're like, well, they're not good, they're not great, but they're okay. To back a little bit, right? But then I turn around and go, but I'm 12 months from insolvency. That helped me inform that 12 months from insolvency look forward, helped inform me that balance I already knew was low, it's really low. That operating deficit that I knew was an operating deficit, it's going to have a really bad impact in the future. I'm not suggesting there's 2 different. I'm not just necessarily an indicator. The way I thought about the question was, would you want folks to think about the result of the 12 months to insolvency test? Would you want them to think about that at all and think what the answer to that at all was when you're thinking about, are you nearly insolvent? And I could see a world where knowing if I passed or failed that could help inform how big of an indicator that operating deficit was to determine whether I'm nearly insolvent or not.
The result of that, though, is two disclosures. If I do the assessment of whether I'm 12 months from insolvency, the government's making the disclosure. At that point, I believe the user's getting the information they need, presuming that the disclosures get worked out. Do I need to also know then? And I'm comfortable if they're like, hey, I'm not sure if I'm there and I'm not 12 months from insolvency, I'm fine with them not doing the disclosure, right? I don't want the 12 months from insolvency to be some form of tipping point so that I get two sets of disclosures, right? I only need one set of disclosures. So do your SFS evaluation. If you think you're in it based on the indicators, you're in it. And do your 12-month assessment evaluation. And if that's the reason why you're doing the disclosures, that's the reason why you're doing the disclosures.
What I'm kind of hearing you say almost a little bit is, if the entity was 12 months from insolvency, that's almost prima facie the most important disclosure. And if you get that one and you don't get the other one, you're fine with that. And so if somebody did that 12 months of insolvency disclosure and you got it, and they didn't, blindly don't think about that when you do your SFS nearly insolvency disclosure, and because you don't think about it, you don't get an SFS disclosure, you're going to sit there and go, I'm perfectly fine with that because I got my 12 months of insolvency disclosure.
That's why I'm thinking about it in terms of they're not just separate disclosures, they're separate evaluations, right? That's how they work. And so whatever order you have them do it in, right? But that to me that's the important part, that you do your one evaluation and then you do your other evaluation. And if you trip one or the other, then you do it.
And so I understand and appreciate that, but I guess I just go back to we're anchored in. I love Jackie and Diane saying like there's a condition and then there's a risk assessment, right? And I get the whole, looking at it from the output standpoint of what disclosures do I get, but it's important for the organizations to state what they're in. Am I in a current condition, or is it some assessment that I'm performing where I believe that I will be in that condition? And so I think that you go through, even if you go through that assessment, I still think that it can help potentially inform your condition. Maybe it doesn't in every case, you're right. Like I did kind of splice it out into two different pieces in that assessment. But I think that there's the possibility for it too. So how could you not?
Yeah, I was thinking about this idea that if you're in this world, I'm a preparer and I'm looking at the indicators and I'm thinking I'm not there. My auditor looks at the same indicators and thinks you are. So now we've got this debate about where you are or aren't. Yet we both just agreed we're 12 months from insolvency. Like that could be used as a tipping point to say, we're going to do we're going to do the SFS disclosure as well. Jeff, I understand your point. I understand your point about two disclosures. And I think I'm probably with Chris in there are two disclosures. It's just, should that look for be a tool that helps you determine whether you are in the condition or not? And you could say, no, don't do it. But I would think intuitively, and we would probably have to say, don't do it. Because I think intuitively, folks are going to want to do it. They're going to want, if we don't want them to do it, we probably have to say, do not do that. Do not use the look forward to determine nearly insolvent at all. Don't do it. Because I think intuitively, people are going to want to do that in a case where you're 12 months from insolvency and it's not obvious whether you're nearly insolvent or not. They're going to want to use that assessment as part of the determination of whether you're nearly insolvent or not. I think they're going to want to do that. And if we don't want them to do that, we should probably say, don't do that.
I think more likely to me, maybe to say it a different way, I think when you do the risk assessment going forward, you might identify an indicator that existed at again, speaking to the condition, right? That existed at year end that wasn't part of our 13, 14, 15 indicators. So, again, I just want to stress that what I'm saying is not that because of a time proximity, because I get that. But what I'm saying is because of, additional insights and looking forward, you might say, oh, wow, I didn't think about this other circumstance that existed related to this condition that helps me take those 4 indicators that I had as of December 24th. And it really adds another one that existed, but I wasn't thinking about it like that. And I'll add this other one. So that look forward can help you might help you make, not should, not will, but might help you identify an additional one to speak to your condition as of that available to be issued date. So that's where I am.
I just wonder too, Chris, whether if what you're talking about, just for you to think about whether it could be done by how you sequence. If you sequence the forward assessment first, and you're a government that actually has to think about it. So most won't, right? But you're a government that actually has to think about it. And then maybe you say, no. But then you're asked to look at this SFS situation. And then, you have a thing that says any other factor that you deem to be, important, whatever. Well, we did think about that thing up when we were doing that evaluation up there. So maybe that informs my SFS conclusion.
So, Chris, are you rebuttable presumption, or it sounds like to me you're regular indicator, but which regular indicator?
Part of a regular, not time.
Sure. How you describe it. I know we've heard from Jeff and Diane, Jackie.
I also wouldn't prefer a regular indicator. I agree with the arguments that Jeff has been making. To me, they're different concepts, they're different ideas. You got to handle them differently. So yeah, I agree with the arguments Jeff's been making, and I think that it needs to be a regular indicator.
Hold on though, Jack. My conclusion is it's nothing.
Well,
I wouldn't put it as a regular indicator because of the whole muddying up the water and all of that.
That wasn't an option here, but if that's yeah, I don't want a rebuttable. I don't want a rebuttable presumption.
The first part of the option is you don't want it included in the assessment at all. Sorry, Jackie. The first part of the question is you don't want to consider forward-looking assessment in the determination of nearly insolvent at all.
So if you say no,
if you say no,
question 4, it says that the board says no to question 1. Should the forward-looking assessment be used to identify governments that are nearly insolvent? If so, how? Rebuttable presumption or regular indicator?
But you don't want to use a forward-looking assessment to determine if they're an SFS.
I do not want to use a forward-looking assessment.
So the second part of the question for you is irrelevant, right?
Right. Okay.
We're at no at the first question.
Do not want to use a forward-looking assessment. So as you can tell, it's not just muddy water, it's quicksand.
Robert?
I'm a no.
Carolyn?
I'm a yes, and if through some miracle yeses win, I would suggest the regular indicators.
So this is why I really didn't like my answer to question 1, because I think we're making it too complicated for because of the small subset of the entities we're dealing with here. I think that my answer is yes. I would say rebuttable presumption, because I think in most cases they're closely tied. I continue to think if you're 12 months from insolvency, for us to say, well, that doesn't mean you're necessarily nearly insolvent. I just think the outside world is going to look at us like we're crazy. Like if you're 12 months from insolvency, you're nearly insolvent. I don't know what else to tell you, but if it would have helped, I'd have stayed with regular indicator and been over here. But even if I'm in that case, we still lose. But so I would say yes, and rebuttable presumption is my vote.
So it's no.
I just want to know, so what does that mean? How is that then structured? Like, what is that linked to your point of, do you specifically say you can't do this when doing this event? Like, what does that mean? Deborah.
I think because we hadn't prepared discussion on, okay, it's not in the list of indicators, but do we say don't use it or just leave it silent? I think that would be a topic that we will want to write up and bring back at a later meeting.
You'll hear my voice over your shoulder.
All right, do we do the last question here and then we can break for lunch?
Yeah.
Not like question 5, not the second question 5.
Yeah, so there's one question left in this section
section,
of
yes.
questions and this section of the paper, which to a certain extent, I think should be fairly straightforward based on what where we've been on the other questions. But there is still a possibility, I suppose, of the question is whether all governments should be required to make the forward-looking assessment. And so by saying it's a separate disclosure requirement, I think we're essentially saying, yes, they all should because they would all have to do that. I suppose a possibility would be if they don't meet insolvent or nearly insolvent, then only then would they do the forward-looking assessment, or would it be everyone? So task force feedback on question 5.
Task force members do not think there should be a forward-looking assessment at all. They believe it would be difficult to operationalize and audit. Some task force members believe that that financial statements should provide historical financial information and that users should make their own judgments and predictions as to what that means for the future.
So officially question 5, what feedback does the board have on whether all governments should be required to make a forward-looking assessment?
Thanks, Deborah and Eniola. And I guess a little bit of response to the task force member. The FASB has this requirement essentially now from issuance date to look forward to paying obligations as they come due. And it seems to be operational and auditable within the FASB sector. They might do a little bit different things with it in their evaluation of going concern, et cetera, but they're doing it and they can audit it. So I wouldn't be worried about that part. I'm a yes here. Every government should be required to do the forward-looking assessment. Jeff.
No surprise, I'm a yes.
Thanks, Jeff. Diane.
I'm a yes.
Thanks, Diane. Chris.
So, given that we are where we are, I say yes to this. But I think that forward-looking assessment, like the devil's in the details as to that actual assessment and what it is and what it looks like. And there might be some things in our heads where as individuals, we think it's a certain thing, but it might turn out to be something else. I think anchored again in that methodology and that framework that we went through with 102 is going to be extremely important in making sure it passes the smell tests with Con 7. So I'm a yes here, but that doesn't necessarily mean that. I guess like to speak to Robert's concerns a little bit with a forward-looking assessment or some of the respondent concerns with a forward-looking assessment. And to your point, Joel, that there's a way to do it to get a forward-looking assessment that's anchored in, in our conceptual framework, and we'll be okay.
Thanks, Chris. Jackie.
So I agreed with the task force members on not doing a 12-month forward-looking assessment, but I figured that if we have a 12-month assessment, everybody should have to do it. So I believe that they should be required to do a look forward.
Thanks, Jackie. Carolyn.
And I would be a yes on this one.
Thanks, Carolyn. Robert.
I'm in Jackie's camp, although as put out in the paper, the tentative decision says if you're nearly insolvent or insolvent would not be required. And in my, if you're already in the camp, if you're already SFS, why do you need to do it? But at the same time, it's probably going to add fuel to the fire. So.
Thanks, Robert. So there
was one comment we got at GASAC, which I think is self-evident, but everybody does it except those who are insolvent. right? I mean, I think we can make a nod to that, right? Like, if you're already insolvent,
Or it's so obvious you're going to fail because you're insolvent, you already did it.
or you're in, I mean,
Yeah,
you know, they don't have to do a
You've
12-month
kinda
look
done
at.
it. You've done it.
Insolvent.
You've made the assessment.
I
You're
guess-
insolvent.
I guess
So
if
I don't know. It'll, the words, I guess, will have to be structured to say that, but I just.
Yeah.
Okay, Deborah. So we're kind of done with that section of the paper. Pause there for lunch. Come back at 1 o'clock and we will pick back up with the rest of the paper. Thanks, everybody. See you at 1. Okay, welcome back, everybody. Hope everybody had a good lunch. Before we broke for lunch, we were had hit a good stopping point in the severe financial stress discussion, and we have one more section of that paper to go. So, Deborah, if you'll kick us off and get us through the next section, that would be awesome.
All right, thank you. So we have one last question, one last section of the paper, which is about the other topic that the project staff wants to get clarification and direction from the board on, related to this part of the project. And that is the purpose of these disclosures. What are we trying to achieve by making this disclosure requirement or requirements, based on our previous discussion? So in the preliminary views, the purpose of requiring the SFS disclosures was stated to be to provide information about a current condition as of the financial statement date, and not to raise a warning that a government might enter into a certain condition in the future. And so based on the tentative decisions the board has made previously, plus the discussions we just had before lunch, we believe the purpose may have changed from that, and we want to make sure that the board is comfortable and in agreement on what it is we are trying to achieve by making these requirements. Where am I? So the everything that we do once we get to the disclosure requirements, we'll have to evaluate against the guidance and concept statement 7. We've talked about that a little bit already today. The project staff believes that when concept statement 7 talks about future events and future financial position, that it is referring to anything after the financial statement date. Notes are there to support the financial statements that are as of and for a date. And so current is for that period and future is anything beyond that period. And so with the board's tentative decision to change the assessment date from what was proposed in the PV, which was the financial statement date, to the date the financial statements are available to be issued, that is changing the disclosures from being about a current condition to a future condition. Now, in doing so, the example indicators of nearly insolvency will need to reconsider whether those are appropriate for kind of a real-time assessment, and some of the guidance about how to make that assessment of nearly insolvent. And we'll have to look at the disclosures themselves against what is appropriate for notes per concept statement 7. What we talked about before lunch in having a separate disclosure requirement involving a forward-looking assessment, we think that the purpose of that is to provide information about a risk, about a potential future financial condition, which would be insolvency. We will have to have more discussions about what exactly, what guidance might need to be provided around how to do that assessment, some of the things that we even talked about earlier today. And we will also have to consider the potential disclosures against what's appropriate for notes in concept statement 7. We also may have to do some additional user outreach if we're considering things that we had not vetted with users for essentiality prior to the PV. I am going to ask Aniola to give our feedback on the last question of the paper. Unfortunately, it got numbered question 5, the same as the last question. So this is the second question 5, or the question that is on page 12 of your paper.
Thank you. One task force member thinks the purpose is to provide information about the risk of becoming insolvent and believes there should not be a forward-looking assessment involved. The purpose would be to provide information about the financial condition in order to let users assess the government's risk of becoming insolvent.
So the last question for discussion is, what feedback does the board have on the purpose of the disclosures being contemplated in this part of the project?
Thanks, Deborah and Eniola. Board member thoughts here, feedback. Chris.
So ideally, at the onset of this project, I wanted the project to actually reflect the condition of the government as of whatever point in time we identified. So financial statement date, issuance date, which is where we are, or available to be issued date. And that's where I wanted to be. In my mind, I saw in us dividing the going concern and the severe financial stress as our ability to take the probable dissolution and look a little forward with that, but the severe financial stress, maybe not as much. I know where we are right now, but I'm just explaining my thought process. And so ideally, and more than anything, and the whole reason why we talked about nearly or near insolvent or nearly insolvent, whatever our terminology is really to highlight that as of that either financial statement date or that available to be issued date. I think now I forgot what we're doing right now, but off the top of my head, but to be able to anchor that in the condition of the organization to reflect it to those users. So that is the primary purpose that I think we have to achieve, and everything else, whether you consider icing on the cake, and you don't like icing, you don't like butter or whatever, it's in addition to the core purpose of this. So I don't want us to get lost on that core purpose.
Thanks, Chris. Diane?
Okay, so I don't believe the purpose of SFS or PD has actually changed. I just think that we've changed the timing a little bit. But I think the purpose of the risk of potential insolvency is different because it is a risk. It's not a point in time, and it's to inform the users of probable worsening conditions. And I think it's important that it's probable, and I think this could also apply to those governments who would be in SFS because of insolvency. And this would also inform that, yeah, they're just going to stay in insolvency for the next 12 months too. And so I think it's important to have that separate disclosure. And that's what I see users are informed of by that second disclosure.
Say that again, Diane. So you're talking about the second disclosure.
The 12 months, so forward looking, yes. That as far as the governments that are in insolvency at SFS, is that the part that, okay.
The look forward
The
disclosure.
look forward, okay. I think it's to inform users of probable worsening conditions.
And Diane, I thought I heard you say that also, like, more accurately reflect their condition, because you talked about it's not improving, so you really understand the gravity of the condition currently.
Right. And I was using as an example, if you have a government that is insolvent and they're making the SFS disclosure, but you're actually doing a look forward too, that hey, in 12 months, this is not improving. Nothing's changing or it's getting worse. And that's in that second disclosure.
There was a big gap, so I guess I figure I might just read my response. And then maybe it'll raise more questions than it actually answers. But I said, I recognize the inclusion of a forward-looking assessment expands the purpose of the disclosures. This would result in the board having to deliberate what the intended purpose is for the set of disclosures proposed, especially if the forward assessment is a separate evaluation and has separate disclosures, which is what we ultimately settled on. I also think the board will have to view these disclosures in the context of CS7. Insolvency could be viewed as a future financial position, thus a probability assessment of insolvency may be suitable for disclosure by criteria, but not disclosure content. I have tried to thread this needle above by supporting the option that leads to a separate type of disclosure with the content to be determined.
I understand you're doing the 102 kind of rule, like the way we approach 102. You're doing a version of that. I don't want to say rule. You're using the same methodology to get there. Is there, what do people think about if this is a risk of insolvency, or whatever exact term we want to call it? It's a risk that exists now. It exists at the point I'm doing the assessment. And one might argue that all the assessment is doing is informing and measuring the risk. And we have lots of things in the standards now where we estimate something. Usually it's a balance. In this case, it's a risk. And it's okay to look forward like a pension liability. We look forward and we make assumptions about how people are going to, die and how much they're going to make and all this stuff. We make those assessments and we disclose them. Actually, we disclose this is the mortality assumption we use to determine this balance. Is there a concern or a problem with saying, here's the risk, this look forward informed the risk, and we might disclose information about the look forward, but all we're doing is measuring that risk as opposed to somehow predicting future financial condition? I don't know if everybody thinks that's crazy talk or views it that way.
Can you talk a little bit more about measuring the risk?
Well, the methodology I'm using to measure to determine whether the risk is high is it probable? I'm going to do some form of determining, is it probable that I will be insolvent in 12 months from this date? That's the tool. That's the tool I've used to measure the risk to say, is it high enough for me to meet this bar to make this disclosure? Chris.
So the thing I keep going back to is that I think that from a probability standpoint, it gets tougher and tougher to make that assessment in the future. And so I think I think it limits the likelihood of having those types of assessments actually turn into disclosures potentially, unless there really is something anchored, like something significant anchored into, again, the date that the financials are available to be issued, or the date the financial statements are available to be issued, because that's the latest date. So I like, part of me wonders if like, yeah, we're going through this motion and everything, but how much there will really be there, because the risk that we're identifying, in order for it to be probable and us assessing that probability as probable as of that date, and that it has to be underlying and sort of kind of be a, at least in my mind, and applying that 102, it kind of sort of has to be in a condition, or, you know, it has to be anchored or rooted in that period. I don't know how much we're really going to find that we wouldn't already know, which kind of is the reason why I thought so much about question 4, and that those two are so interrelated, because I think it'll just bring you right back to, hey, you didn't look close enough at this. This is around at this date. This is present. And so I'm fine with doing it, because I really think it's an exercise in, like, a completeness exercise, and making sure you had all of your indicators identified. And I know we're not going that indicator, right? But
yeah, but I hear you. But you're back to tying them together, right? SFS and this, whatever we call this, the forward-looking assessment risk. But the board has said they're separate.
Yeah, I guess I just don't know, once we get out of this meeting and into the next step of, now you have to come up with whatever that risk assessment actually looks like, how you can create it in such a way where it's completely separate, looking at different things and not anchored in to some degree in what it is that exists as of that issuance date, available to be issue date.
Jackie.
So I too agree that we need to consider this within Con 7 a little bit, and whether or not we can do this. When I was looking at this, again, I'll say what I've said twice already. I see this as 3 different pieces, right? There is, we are at severe financial stress, or nearly, meaning we're at insolvent or nearly insolvent as of the financial statement date. At the date that we're available to be issued, we do a look at it and we see, okay, it's progressed now where it could affect the next financial statement that we've got. I've got something right now that has happened that could affect my next financial statement that's going to be issued in 12 months or 8 months or whatever. So that's a subsequent event that I can put on there. Then I've got this other thing that might possibly happen, probable, 12 months from then, which is another deal altogether. That's a risk assessment. That's based on something that has to have actually happened by the date that the financial statements are available to be issued, but I don't know what impact it's going to have for sure. And the Florida law is a good example. So what if I know if it's passed? 60% of the voters said that we're going to cut property taxes. That doesn't do anything to tell me whether or not I'm going to actually be in severe financial stress, because I've got to wait till the legislature actually decides how they're going to make up the difference in the cut in property taxes to see how it's actually going to affect me and whether I'm going to have a situation. So now I've got to do a forward-looking assessment based on what I think might be a probability or couldn't be a probability 12 months from the date the financial statement is issued, which is 18 months from the last date of the financial statement. So yeah, I think that we've got different kinds of disclosures that are going to have to go on related to these different kinds of assessments that we're going to have to be making to come up with this thing that we've got here, whatever it is. So I think that Con 7 does come into play here, because when we're looking at that forward-looking assessment, it's got to be something that's actually happened by the date before we can actually do anything with it going forward. Otherwise, I think we're clearly in violation of Con 7 on forward-looking assessment. So I think we do the severe financial stress disclosures, kind of like what we've been looking at and thinking about. I thought that we did a pretty good job on those. On these other pieces, I don't know. I'm where Chris is. I have to see what shakes out on that.
Carolyn.
I want to be able to provide as much insightful and useful information about possibly nearly insolvent when the financials are available to be issued without compromising Con 7. I know that's a lot. That's asking a lot, but That is what I'm hoping to get out the disclosures. How we thread that needle, I don't know, but that's my thoughts.
Thanks, Carolyn. Robert.
Well, given that I was no on question 3, but we're past that. What Chris was saying resonated, that I don't think the original, what I would call the original purpose of the disclosures has changed. And what was outlined in the PB, I think that's there. But then I get into, and I'm not going to repeat things, but I'm sort of where Jackie is. I've got that same issue. And I think that's why maybe I'm rooting it in this Con 7 framework or not. I think once there's some work on deriving on what that looks like, then I'll have a better idea on how to respond. But again, I can't get beyond the fact that I think that the universe of this, where this is going to apply, is going to be so small. But if that's the direction that the board is going, we've got to provide something. We got to have a definition of what this disclosure is. So, but I don't know what that is sitting here today at the table.
Jeff.
Just a couple other things for you guys to chew on as I'm done chewing. As I was looking through this purpose thing, one of the things I went back to, and maybe others have it straighter in their head, but when we think about Con 7, I think we're particularly talking about 10B, which talks about predictions about the effects of future events on future financial position. And so I sit and I go, insolvency. Is that an event? Or is that a future financial condition? And originally I was thinking it was an event. It's like we think of somebody declares they failed to pay. But then I thought, no, it's maybe not an event. It's actually future financial position, right? Failing to be able to pay your obligations is a financial position. And therefore, I'm like, well, 12 months to that sounds like it's a prediction about future financial position, which is why I say, got to think about that content of the disclosure. And I'm trying to finesse it by saying, well, you guys think about content, you may have to think about maybe how we label this disclosure is the best we can do if you want to not overtly violate concept statement 7, right? But then I also think about, we also had the forward look on probable dissolution too. And probable dissolution is, I would argue, an event. And so when you think about that and you're like, predictions about the effects of future events, now, then I think, wow, that probable dissolution gets pretty close. We do go on to say on future financial position. So, I mean, maybe the prediction isn't about future financial position, because once you dissolve, what future financial position is there at that point, right? But I think these are the things that are going to have to be sort of thought through, just to make sure, like, do we want to violate concept statements? Does the board want to violate concept statement 7 directly? Do they want to try a 102-like approach and sort of finesse it, or where you're like, it's about requirements, not content. We can steer clear of content. But that's some, tricky territory.
So I think there's a couple of things we could think about. I would say over my time here, I've heard it said at least a few times that the board can violate the conceptual framework if we choose to, if the situation calls for it. we don't really ever do it. But as we prepared Con 7, I think we talked about that. We said, there could be something that's here. And it was either in those discussions or the 102 discussions where I think I kind of remember stakeholders and the board maybe even a little talking about it when we were worried about 102 and whether 102 violated, and we kind of came up with this way in which we didn't violate it. But there was some notion made, and I tried to go back and find it, and I couldn't find it, that, well, for going concern, maybe that's important enough for us to violate it, but not here yet. And I'm not here. And so I've got 2 points. One is, if we're ever going to violate the conceptual framework, being as clear as we can be about an insolvency, 12 months from insolvency disclosure seems like a important enough issue, foundational to the financial report. Users want it. The auditors think it's so important, at least however you think it's tied to going concern, they elevate it up into their report more than they do anything else. Maybe it's important enough to be okay, to just be clear in the disclosures and violate Con 7 for this disclosure. That's something we could talk about and choose to do. Or, this future financial report position stuff was in Cons 3 before, right? It wasn't new in Con 7. It was in Cons 3. So I think when Statement 56 was put in place with the going concern aspect of it, now our literature related to going concern wasn't quite as clear about the forward assessment, but at least some people think it's in there. There's a notion of being able to pay your obligations as they come due in there. And it was about this risk of, is there a substantial doubt you're going to continue as a going concern? And maybe I'm bringing too much FASB stuff into it, but if this notion was violated in some way, then the GASB 56 made you disclose it. And that somehow, at least there's no discussion in the basis to 56, that was deemed to be a violation of Cons 3 at the time. And so it seems like there could be a path that was somewhat similar to what I was trying to say earlier. This is a risk. This is how we measure the risk to inform. This is a tool. The assessment is a tool to measure the risk as of this point in time. And that's not a violation.
That relates, and maybe
things
this
to
is
think
helpful to others. We were talking over at lunch the distinction between, this idea of a prediction. And if you think about, and I'll use the term going concern, even though I know you'll know what I'm talking about when I'm using it. If you're saying going concern, if you think you just stop there and you say that, am I predicting going concern? That sounds like I'm predicting a future thing. I'm making a prediction. But if we say we have guidance that has this thing called going concern uncertainty, and the uncertainty is a today thing, because here's what our guidance suggests about going concern uncertainty. And if you feel you're in it now. And therefore, if the disclosure is about going concern uncertainty, and maybe we have to term it a different way, that's not a prediction, because that's using our literature to come to a conclusion that is valid. That doesn't mean necessarily you will become insolvent, because there's a probability threshold in there, but it's about the uncertainty threshold that becomes the thing that's today. And if you view it that way, then I would say, that's not a prediction. That's a reality. That's a today reality given what we have written out. I think that's a version of what you're talking about.
Saying
Joel.
the risk. You're saying uncertainty, I'm saying risk.
But thinking about it in those terms, then that distinction avoids the concept of Statement 7 if you're able to get there.
I kind of think I hear what both of you are saying, similar to what I'm saying in a different way, which is just you're still anchoring it in something that is as of that available to be issue date, right? You're just figuring out what that something is, right? And so if that something is this going concern uncertainty that is foundational here based on whatever you're looking at to get there, then that's what you hang your hat on.
other thoughts on, I don't want to say agreement, but sounds like a could be a path to explore for the team, or sounds kind of like what you're thinking, or that sounds like a violation of Con 7, or that sounds crazy. I don't know.
I think it makes sense what you're saying. I was going to ask, so how do we get around? And I know 56 was before Con 7, so it's not like, okay, how does it blend with Con 7? But your explanation of 56 and Cons 3, that made a lot of sense to me. So, and what Jeff is saying too, I think it makes sense. I think a lot of it's going to be, we got to see it in front of us and then think through it and then kind of refine it as we go.
I will say this just when we're having a conversation, just so we all know. And if I've been told I'm wrong, somebody will correct me. I believe that when we brought in everything into 56, we brought it in. I don't think we bounced what was in 56 against the concept statements. I think we just brought it in as was. And so, subsequent events was brought in that way. Going concern, I think, was also brought in that way. So I'm not sure it was really going concern really would have been evaluated against the concept statements at that moment. Neither was subsequent events, which is why we just did the project, right? So I think concept 3 would have existed. I don't think we bounced all the stuff that are in 56 against that concept statement. So I think the conversation is still the right path we're going down. Is I don't want us to hang too much on, well, we already did that assessment, we were okay. I don't think it happened.
I think the one, oh, sorry.
No, you're wrong.
I think the one other thing for me is understanding the circumstances that we're talking about here, right? We are talking about those organizations that aren't already near or at ultimately, right? That's where the real, I know we're talking about the different disclosures, but that like the real value is that you could have one that's not currently, but you're looking forward, and it may be over the next 12 months, right? There's less value in, hey, I already know you're there. And I acknowledge your points, Diane, that you can understand how significant there is, but you already know they're there, right? So when we're talking about it, we're talking about that. And understanding that a probable likelihood is significant. And so we're literally talking about going from 0 to 1,000. And so I think that's important to just keep that in mind. Not that it means anything, but it just means that I think these are really truly outliers of outliers. And that they're really truly few and far between, that you would have an instance where I know we're good to go right now and we're green and we're okay. But I know with the certainty of probable that in the next 12 months, stuff is going to hit the fan. Like that fact pattern is pretty unique. So that's what we're talking about here.
Jeff, I don't know if I'm going to say this right, but I think one of the threads maybe Jeff was pulling at is, if you think about our world today, and we've got this underlying assumption, right, that you are a going concern. We have to assess whether there's substantial doubt for your ability to continue as a going concern, and that the threshold is probable. And I think what Jeff was kind of pulling at is, and you're trying to say, do you have uncertainty related to your ability to continue as a going concern? And if one of the ways to measure that is you look forward 12 months and say, are you going to continue to meet obligations in 12 months? And you say no. I think that's kind of what Joel, I think, is getting at, maybe what Jeff's getting at is, I'm using that look forward to determine whether or not I actually still have that assumption, or I violated that assumption that exists as of issuance date. That going concern assumption still has to be valid as of issuance date. And if it's not, then I'm going to say, hey, I'm not going to be a going concern. Well, at some point you could say, that's less about where I'm going to be in the future. It's more about whether I still have that assumption, that going concern assumption is still valid as of right now. And so therefore someone could say, that's not about future events and future financial position. It's about whether or not I'm still a going concern as of issuance. And he's kind of pulling the thread on that's not really about the future as much as it is about now. You just used the forward look, or the ability to continue to meet obligations, as a way to determine if you still have that assertion, which is similar to how we're using mortality tables and pay raises and all that stuff in pensions to determine what that liability should be. And that liability is also as of year end. I don't know if I was pulling the thread the way you were trying to articulate it, but you were almost trying to get us back to, maybe it's really not about the future you're assessing whether you still are a going concern or not. Current literature, I know we took going concern out of the project, so I'm trying to be careful to not say, I was hesitant to bring this back because I'm trying not to bring going concern back into the project, but it's a relevant thought process, at least I was trying to go through.
And
No, Deborah, I think, was that, yeah, sorry.
So I was just going to say, so understanding that and not trying to pull it through, but I think we need to look through that going concern lens and understand that the first part of this project was to understand what that really meant within the context of government, right? And then it was probable dissolution and severe financial stress. And so for me, just personally where I am, probable dissolution, I'm able to get there so much quicker, right? And so the idea that there's a high probability that this will no longer exist as a legal entity over the next X amount of period of time because something's happening right now and we're able to project out on that, like that's easy for me. What gets harder for me is this insolvency or near insolvency based on this fact pattern that we've identified right now and making that projection going forward and not having anything that's rooted as easily as, hey, the legislature had already, signed this saying that as of April, we're getting rid of this, entity as it exists today and moving it over into this other piece or whatever it might be.
Deborah.
My understanding of how we've operationalized concept statement 7, granted it's still a very new concept statement, right? Is that you can use predictions to determine if you have to make the disclosure, but you can't put the prediction into the disclosure itself. And so it's, okay, we're going to predict. I've been trying to think, and this is a really terrible example in a lot of ways, but if we think it's probable that the United States is going to win the World Cup, then you have to disclose how many soccer teams are playing in your rec league. If that was the requirement, you couldn't say in your disclosure, I predict the US is going to win the World Cup, but by predicting that, you can disclose about whatever the current condition is today. And so there's that. Yes, I think I've heard the term thread the needle a couple of times around the table of trying to not lose sight of, you can make predictions, but you maybe can't disclose what those predictions are.
Right. And that may be one path, but the other path that I think we're talking about too is this path of whether it is or not is not a prediction. And if you say the construct that accounting standards sets up for a government to determine whether or not they have uncertainty or risk is a today thing, it's because the standards say it's a today thing that's not a prediction, right? Because it's not, it may not be the case, right? It may not go insolvent, whatever. It's about what the government's being asked to do. So I agree that may be the place we go, but the other place you may go is, okay, is there a way we get this so that it's not a prediction, right? And we get that because we do this, we view it as it's a assessment the government makes with that the accounting standards tell them it's a today thing. It's not a prediction. It's a today fact that you have insolvency. Why? Because my accounting standards tell me I have uncertainty, right?
You compare it to 102, though. I mean, I'm thinking about the comparison 102 because we keep bringing that up. But if you think about 102 is about identifying the concentration constraints, identifying where there's a potential for substantial impact. But then what the board said at the time was, but we don't want governments just to disclose all those risks that potentially have a substantial impact. So let's filter it. Said, well, what we're going to filter it as an event happening, or going to happen in 12 months. Financial statements are available to be issued. So you were supposed to look out 12 months and say, is there an event going to happen in the next 12 months? that's going to cause that risk to be real, for lack of a better word, be real. You're going to feel the impact, right? We didn't talk about when you're going to feel the impact, how long in the future you might feel the impact, but it would make the impact occur. And so the event, so really it was about the risk being something that existed as of issuance date, right? The risk existed. It was known and existed. You just were using the event to trigger whether or not you had the disclosure or not. I'm just wondering, my brain is like this idea of, I keep going back to going concern. I shouldn't keep doing it, but I kind of keep doing it. It's like the assumption is you are a going concern. The forward look about can you meet your obligations is just they trigger to determine whether or not you have the disclosure that says that assumption's been violated. The assumption theoretically existed as of year end. It existed when you created your financial statements. You're basically now saying, yep, that assumption existed when I created my financial statements. I violated it. You can draw a parallel to 1 or 2 with that pretty quickly if you wanted to. Now, I keep using the word going concern. Deborah, I'm sorry. I keep using the phrase because I know, and I'm not trying to bring it back, by the way. I'm not trying to backdoor a conversation and bring it back. I promise you I'm not. I'm just trying to draw parallels of how to think about it, and I just keep using that as the example, and I'm sorry for that.
You could argue every government has the risk of insolvency, right? It's just, this is the tool we're going to measure that says, as of today, my risk is high enough because I've used this tool to measure it. My risk is high enough that I need to actually include a disclosure that tells you about my current state of that risk of insolvency that exists as of today. Which is, it's the same thing. It's just using the words that we're using.
And I think the only thing and the parallel that I'm trying to make in my mind and still trying to go through it as we talk is that in those 102 disclosures, your condition was your condition. Your condition is the concentration, the constraint, right? So you have that condition on that day, right? Like that. Yeah, but that condition, that's how your organization is. So if I'm relating it to what we're talking about here, that condition existed, and then there's a risk of an event occurring in the future, a triggering event that's going to cause that to become a negative, or however we want to say it. So I'm just trying to correlate the two to each other in that if I'm looking at that as the condition, looking at this as the condition, and I know we have other meetings to talk about it and papers to review, but that's where I'm trying to just, we already created a little bit of a framework. So like, can we leverage that to a certain degree?
So Deborah, this isn't a board decision, right? You're just asking for feedback. Is there something, I'm not exactly sure what you've gotten some feedback. You've gotten some ideas. I don't know if they're good or bad, but do you want more? Is there another question you'd like explored? Do you feel like you need more consensus? What would you like for us to do at this point?
Yeah, so this is the hazard when you ask the question, what feedback do you have? You could get anything.
Deborah, can I?
Yeah.
I just want to make sure we kind of talk about it, right? Since we're doing it. Because the one thing we really haven't talked about yet, you asked in the question actually, and I don't think we really actually talked about it. So we talked about, is the fundamental purpose of SFFs changed? And it was a condition. It was always a condition, right? But when we did the PV, it was a current condition. It was a condition as of year end. Back in March, we changed it to a condition as of issuance. Now, you can argue it's still a condition. You can argue it's still, a condition, but I think what Deborah was trying to poke at a little bit is the fact that we've changed it from as of year end, i.e. a current condition, to a condition as of issuance, which you argue is not a current condition, it's something else, it's a condition. Maybe the word current can't belong there. Is that also a change in relation to the temporal bounds of what's in the financial statements, in the information that's in those financial statements, and is now different? Now, maybe we don't totally know that today because we haven't gone through the indicators. And I think you, Deborah, you mentioned the fact that we might have to reassess the indicators in relation to the fact we've changed the date. And maybe that's a conversation when we get into the indicators. But you did, part of the conversation, part of the question you asked initially a minute ago was, maybe not, yes, did we change it from a condition? No, we probably didn't. but do we change it from a current condition to some other type of condition? And board thoughts on that as it relates to Con 7. Like, does that bother anybody that we've done that? And maybe that's a conversation for later. Because we all went right past that, I think, when you asked. I don't think anybody really responded to that. And maybe that's a conversation, Deborah, that we can have with the indicators, because we're going to have to get with the indicators. But I'd love to know thoughts on that probably right now, too. Is that fair to say?
We wanted to get some thoughts on that now. Yes.
That's what I thought.
But I think when we extended it out to the dates and financial statements are available to be issued, it's to take into account all of those things that have happened since then. So we're talking real events. We're not just, okay, we're going to just predict that it's out there. So I think taking into account the real events anchors it in something.
It does. And sorry, Jackie, go ahead before I say anything.
Everything's got to be a real event. Even the 12-month look forward's got to be based on a real event that has happened rather than something that's going to happen. Otherwise, that is a prediction. So something has to have happened before the end of the available to be issued that would cause us to determine whether or not we've got something that would cause us to be no longer a going concern or whatever. But I do think that they are different. The one current is as of the financial statement date. And this kind of went to my point on, I think we've got 3 different things going on here. So we're going to end up with having to look at disclosures from maybe 3 different perspectives to see if they all go together or they have to be different or what they end up being, whether they're RSI.
And
Just my thoughts.
Diana, what I was going to say is because I'm not surprised by what you just said. That's why I wanted you to go first. And I agree there's events, Diane. I think what at least the staff's trying to make sure we understand and we know the rationale for is a lot of those events now have happened since year end. So they've happened between year end and availability issue. Are those current events or future events? And are those future events impact on future financial position, which is 10B? Or are they not? And if they're not, why not? Because they are events, theoretically, if you think current is year end, what is everything after current? And 10B talks about future events on future financial position. So are we already kind of in a place where we're going to need to explain that in relation to Con 7 too? And I think Deborah's just asking for how we think about it and how we articulate it, because ultimately we've got to articulate that in the ED, because we went from the PV to ED is going to go from year end to that and how we articulate it. Does that make sense? The question, at least. Am I right? I'm looking at Deborah going, okay. And we're not saying there's a right or wrong answer. We're just trying to talk through it and understand where the board sits.
For what it's worth. Maybe worth something for like 10 more minutes or something. I'm not so sure that as of the available to issue date isn't the current condition that I'm talking about. I mean, we're seeming to create this separation that available to be the data financial statement date is the only time you can be the current, quote unquote, current condition. And I don't see that. I don't see anything that's happened before you put it out to be what we could call a current condition as of the date they're available to be issued, because it's informed, and therefore I don't see it as predictions, because I'm not asking you to predict anything. I'm asking you to assess what has happened to you already. And so I don't see that as as necessarily a CS7 problem.
Jackie seems to have something to say.
I'm not sure all of it is a CS7 problem, but I don't agree that as of the financial statements being available to issued isn't necessarily a current event, because if it doesn't have an impact on the financial statements as of the date of the financial statements, then it is going to be something that will affect future financial statements, a subsequent event, unrecognized subsequent event. So to me, that's not a Con 7 issue necessarily, because we've identified it and we know it's going to have an impact on the next set of financial statements. So that one's not a problem to me. It's the 12-month look forward from there that becomes a future event to me.
I agree with you there, Jack. You're right. I agree that 12 months from there, we've had some discussions about, and there's some hair on that. But as far as up to the available to be issued date, I don't think I'm making them predict anything. Right.
Jackie, do you view, I hear what you're saying, and I tend to agree with you, right? That anything that's happened after the financial statement date is a subsequent event, kind of by definition. So do you think that available to be issued is a condition then? Like, is it a current condition?
No, I don't think.
Okay. Is
It's a
it a
current
condition? Can we call it a condition?
I don't care what you call it. I care about how things get measured.
Okay. I think it matters what you call it, right? I mean, it depends, right? I could argue it doesn't matter what you call it because I think it's important enough. And if we want to call it a violation of concept statement 7 to do the assessment as of available to be issued instead of the current period, I might be okay with that.
Yeah,
But I think
like
it
I said,
matters what you call it.
I don't think that if we're talking about something that'll have an impact on the financial statements because the event has happened and it'll affect the next financial statements, and we know that it's going to affect the financial statements, I don't think that's a Con 7 issue. It's the 12-month one that's the thing for me that is an assessment. It's a probability. That one to me is a little bit different. So I'm looking at these probably a little bit different than maybe you are. But that, in my mind, that's how I'm seeing it.
Because it's not a prediction of future financial condition. Those are the words. It's not that. So other board members have thoughts on this particular topic? Carolyn?
I agree with the way that Jackie explained that. I would not see the events that are happening after, up until the financial statement are available to be issued as being in violation of Con 7, but I do become uneasy when we go out beyond that period. So.
So my computer died, so I asked this question from somebody who would have known. So it's actually relevant to the conversation. 10B is about predictions of future events and future financial position. Just texted me and reminded me that when you do subsequent events, for instance, as of issuance date, the events we're talking about are events that already happened, so we're not predicting an event. Which I think what you were just saying with Jackie. No, I thought I heard that. I just was also double checking it because my computer died. But that is relevant to the conversation, I think. Okay.
Robert?
As I sit here and I'm nodding as Jackie's talking, you probably, if you're observing, I'm in agreement with Carolyn and Jackie on this.
Thanks, Robert. I struggle a little bit with the way Jackie looks at it. I kind of wonder if I think part of me continues to worry we're just trying too hard not to violate the concept statement. And we could just be straightforward, say this issue is important enough, and let's not make it more complicated than it needs to be. But I can kind of sort of live in this world. Like I see the logic, I see the path. So maybe I can live there and be okay with that, but I'm not totally sure. Jackie, yes.
So I'm not saying necessarily that it's a violation of Con 7. I'm saying we have to look at it and assess it and figure out if it's a violation of Con 7. And I don't think that we've taken the time to really do that yet. I mean, there's enough of us that seem to have concerns about how exactly does this fit in with Con 7? Do we actually have to do a violation, or could it fit in? That's kind of where I'm coming from now. I don't see the other two being an issue. I see the 12-month one being the Con 7 issue.
And I got that. I was really more
Okay.
talking even about is the condition as of the assessment date, is it in and of itself already a violation because it's after the date? I understand how you described it, and I think I might could live in that world, but then I get even broadly with that and all the other things. Are we just trying too hard? Let's just be more straightforward. But maybe we're still threading the needle, and maybe I could live in that world. I tried to give Deborah my thoughts on that particular thing that Alan brought out, not the forward-looking assessment.
That's why we get paid the big bucks, to work really hard.
Well, sure, understand.
Well, and if we remember, concept 7 is about the content of what actually goes into the notes and not the assessment. And so assessing something as of this date or that date or whatever is probably none of that would be a violation of it. It's what's the actual disclosure that goes in the notes because of that assessment, which, since we don't know what the potential disclosures are at this point, we can't say whether this is or isn't or whatnot. We will get there when we get to that point. But I think
And maybe that's the point. Maybe we've gotten some feedback from the board today on that subject, but you really can't draw this out until we actually put the disclosures in front of them and say, okay, here are the actual disclosures. Is Con 7 now a problem? And so maybe today's just becomes the starting point for us understanding where their thoughts might be and the ideas might be. And we just know when we bring back the actual disclosures, especially this new one that we just got today, then we have to just talk to that at that point. That's probably fair, right?
Yeah. And, these may not be slam dunk conversations when we have them later.
That seems pretty clear. But do you feel like, is there still something like Alan brought out at this point? You've got some thoughts. Do you feel like you have enough? Do you want more? Is there some other point that you'd like some thoughts on? You've had enough. I don't want to stop until.
I think what's clear is we've had a fun conversation today. We will continue to have very fun conversations in the future.
We appreciate you facilitating such fun and engaging conversations. It's a really important topic. The GASAC, our stakeholders love to talk about this project more than any other, it seems, because it's important to them, right? And so we appreciate all your work. We appreciate you. It's not straightforward. It's not easy. There aren't simple answers, right? And so we appreciate you continuing to work with us and bring us stuff and think through it and help us think through it. So appreciate the work and look forward to next time.
Yeah, this is normally the point in the meeting where I'd say, and next time we're going to talk about, I don't know what that is yet. We'll need to take what we've gotten today and come up with a plan. So stay tuned.
I think
whatever
fair.
It is, it will be fun.
That's very fair. Very fair.
And I would like to just say a quick thank you to two of my team members who have reached the end of the GCD road. Roberta and Eniola will be rolling off of the team because they're, rolling off of the GASB staff. And so thank you to both of you for all of your work over the last 1 year for you, about 2 years for you. I really appreciate everything that they have done for this project. So
thank you, Deborah. Okay, well, that concludes our technical business, but like Deborah and others before her, I wanted to recognize, at least for me and on behalf of the board, a couple people who are ending tenures in some way, shape, or form. The first is Roberta Reese, who is retiring from the staff. Roberta, you've been just such a tremendous, had such a tremendous impact on this organization for many years, over 25 years. Really, thank you for all your contributions. I have that you led and might have been the only person that worked on Statement 42. I don't know if that's what I have. Is that true? Could be true. 42.
Time ago, right?
That's impairment of capital assets and insurance recoveries. And, that was a standard when we did research on capital assets that everybody said that one's working pretty good. That was working fine. We don't need to do anything with it. So great job. Worked on Statement 51 on intangibles, worked on the pension standards. We're getting into some big ones. And then the financial reporting model, of course, Roberta invested a significant amount of time over the years in all aspects of that important project and subsequent implementation guidance and all the due process documents that led up to that and numerous other standards and concept statements. Just such an impact. And I think the people here really love you and have benefited a lot from just your personality and the way you go about your business, and you bring so much to us. And I just wanted to thank you for all your contributions to governmental accounting and the profession, and we wish you the best in your retirement.
Thank you, Joel. I'll miss those days of sitting for hours and hours at the board table. No. And I'll miss all the people too.
You think about them on your travels, I'm sure, all the time. Thank you, Roberta. But also, Mr. Praviti, Vice Chair Praviti, this ends your tenure on the board at the GASB. Really appreciate all your contributions. You started with Statement 83 on AROs, so 83 all the way through 105, so leases, SPIDAs, fiduciary activities, financial reporting model. You got some doozies in there. That's pretty good. That's a lot of work. The non-accountant, you really dug in. I think you know accounting better. I think you qualify as an accountant at this point. So you dug in, very detailed. You've made a lot of contributions to how we operate and keeping us on track and in line, and lots of contributions from the user perspective. I think all of us view that, you're pretty unique in your background, and we all always benefited from you just describing, that perspective to us, but you always stayed very fair and balanced in trying to find the best answer for all our stakeholders, not just the users, but you definitely brought them, and you certainly you engaged with them, right, and got them to participate in our process and really improve that. It's been really helpful to everything. So thank you for all your contributions on the board.
Thanks, Joel. I'm awaiting my junior CPA badge to be sent to me. But thank you. It's been a really rewarding experience. And to anybody watching or listening who's ever contemplated, should I ever consider working on the GASB board, I would definitely consider it, because it's a pretty terrifically rewarding experience, in part due to everybody who you get to work with, but just the importance of what we do and the mission. And I will certainly miss it. Thank you.
Well, thanks again, Roberta and Jeff. And thanks, everybody. Great meeting, really productive week so far. But I say so far, the board meetings are done. We have completed the work week from a board meeting perspective, at least. So thanks, everybody. We will come back. I guess our next time we will be together as a board is a virtual public forum on infrastructure projects, which is June 13th.
July 13th.
Sorry, July
13th.
July 3rd. We don't go backwards.
We don't go backwards in time. We don't have time.
July 13th at 1 p.m. Eastern, I believe, but check your local listings. And I look forward to seeing everybody on screen then. Thanks, everybody. Meeting adjourned.